Meow. You can sit on my lap. Just sit nice. Alrighty. Ow, 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 ow. I was not patient, unbelievably. Rime? Good morning. Man, I was sitting on these AMD things for like a week plus since like down here finally hits the targets that I want, and it chickened out, and I put a stop in and I got triggered this morning. And I I got out with like, I don't know, maybe just under like 10%, which isn't like horrible, but it was basically pocket change, because as soon as this ran back up after the gap filled, they like ran back up, and and then the contracts went up like 30%. And I was like, no, because it was a huge gap up. And so I was like, well, it might fill the gap, but I'm not sure that these contracts are going to recover, because I could see it was getting overbought. So in my mind, I'm thinking like, it's probably going to get overbought and stay overbought, and then it probably has some kind of a bigger, longer pullback here like throughout the day. I was like, I really don't want to sit on these again, because they were basically like hovering at like 5% below where I entered them. And I entered them like way back here. So like volatility had clearly been suppressed for a long time. And so I'm like, what? I'm like, I waited so long, and then I got cold feet right at the last second. And it's like, man, what the, I also got out of NU this morning. I'll keep watching it because I know that some people are still in it. Most curious about MPW to see if it can get above 450 here. That was my last kind of big swing here. I'll check out Rime in just a second. I promise. I know it usually takes me a little while to get there, but yeah, I'll check it out. I'm just charting what I'm charting right now, but yeah, this is a bummer kind of a morning for me, because I'm like pretty sure I could have rocked AMD this morning, like really decent profit margin right there. It's still going. I don't want to chase it. I'm just irritated. Let me check out. Good morning. But I guess if you were in it with me, you probably are pretty stoked right now. I don't think a lot of people are. But you probably would be really excited if you were. So I thought it might go all the way up to like 125 here. I mean, technically, like on the 4 hour, it could keep going. I mean, like, this is pretty much exactly what I thought was going to happen too. I'm kind of irritated. But I had thought I was going to get out before here, like in this area. So I don't know. There's a bit of a rising wedge. There's a falling volume. I'm just not sure what to make of this. But it might be a good one to like reassess later. I'm just not a big fan of like chasing it up if it's already going. So, hey, good morning if you're just joining. Good morning. The stream today probably be a little bit shorter than normal, but I'm going to try to work on just trading today. We'll talk about AMC and GME as applicable. They're not really showing a whole lot right now. GME came down to 26, so it's getting close to that 25, which is really like the better buy-in. And then AMC is just kind of hanging out, typical, lagging a little bit behind the market, which is largely kind of gapping up, I would say. I mean, small caps gapped up this morning, percent or something, and they're kind of easing back. But really curious about Apple today. I think this might be a really good entry point. There's a high risk involved because it did drop through its 4-hour moving average, and I think the daily is really low, but it's coming onto a creek here, and it's hard for me to see this and not be like, yeah, that's potentially a good entry point. Depending on what time frames you look at, Apple might be looking really good to you. If it's not big picture wise, if it doesn't find a bottom here, it could be really bad. But because there's a weekly divergence on RSI, I mean, like, it's substantial. It's a huge divergence on RSI. So I think if Apple doesn't find a bottom like presently, then it's probably going to go all the way back down to near 200, which sounds horrible, but in reality, it makes sense. This area was checked as a bottom right here, like 195, and it's a fib retrace from the very top. So it's a 618 on this full move here. So in terms of I don't have a rising channel here, but in terms of a rising channel, I'm pretty sure it would match the angle here. We could just check it out. And then I'll check out Rime. But I really want to keep my eye on this one because I think that Apple might be a really good pick, for entry, at least on the bounce here. So I think it's at like a 50% mark on this channel. That's what it looks like. It looks like this channel was actually developed back here. And weirdly, it's not really lining up very well back there. Maybe if we angle it a little bit better. It's roughly correct. I mean, you can see that this distance here is equal parts around it. So there may just be like another, like kind of another channel line right there. But I think this is the core channel. So yeah, it makes sense that it might come all the way back to 194. And again, on the weekly, it looked pretty bad. But locally, on the 4-hour, this looks like it's ready for some kind of a reaction. And it has a huge gap down. So this is definitely one that we want to consider. I'm not looking for much. Like, I'm not looking for anything like too crazy here. I don't really want it. I don't think it's going to just rally and go necessarily. I think it needs to make the bigger retrace probably. But I do think it's very likely that it comes back up and checks at least near like 227. So the trade, as I see it, from this floor back up to like 227. And then I'm guessing, I'm not 100% positive yet, but I'm guessing that this push out that did not follow through is going to end up being like the new channel. So I'm looking for a reaction from like 220 up to 227. Again, not a huge move. If you're not able to play any kind of options or trade any kind of options, it may not be the most attractive because I don't think that's very substantial in terms of percentage. It's like 4%. It's very possible it goes a little bit higher and kind of presses all the way up to like near 230. There's an earnings coming up. And it looks like it's been dropping lately into earnings, like during the earnings season. So this is on the 30th. So it's right around the corner. I mean, you take it as an opportunity if it boils up into earnings. It might be a lot like this, where you see this kind of build out. I mean, you can see the increase in selling pressure. It's like getting pretty high now. But RSI, MFI, MACD, all sort of slowing down into this bottom area, chopping. So it's in a mode right now where it wouldn't surprise me to see it kind of have an upthrust and a final drop. Could be substantial. I mean, this earnings drop was huge, right? Huge earnings drop. Even though it was bullish, that was a 12% dump. So it's not impossible that we get something kind of similar here we might get a little bit of a move up and then back down. You can get a really similar kind of a style as what we just saw up here, and then dump really, really far. And then it would be like super spicy if it did that. So maybe a potential trade from 221 here up to 229 or thereabouts. And then I think it's going to drop again, but that's because, again, the bigger picture doesn't look too hot. So if you're just joining, I'm watching a few stocks this morning. We're going to look at Rime in just a minute, Rime. MPW's up about 4%. I bought in around $4, expecting it to go to maybe $4.50. So this is just a shares only swing trade. We'll see what happens. I mean, it could technically just go, but I'm thinking more likely it's going to come up to about 5 at most. So that's where I'm at. We'll see. Wolf this morning was on our watch list. That's down beneath $6. I think we talked about this, but Wolf was one that might be a really good buy-in because, again, big picture wise, it's got a lot of potential to go all the way up here to from like 590 all the way up to 10. Like it may be a pretty substantial breakout. That being said, we're kind of missing the mark right now. We're not seeing any kind of recovery just yet, so just a hard sell down. We may be going for that gap after all. I didn't think we would do it, but at the very least, we probably want to watch it into earnings and just see what happens, because at this point, I'm inclined to think that if it comes back above 610, that it may be a very good signal of bullish action, but we're going to have to watch it carefully. Yeah, whatever. That was already this morning. This other, the other way to kind of buy in is through indicators, but I think you really want to have both the indicator moving the direction you want and the price action, unless you're looking for a divergence of some kind. So if you're in NU, and some of you were, I'm out of NU this morning on the pop-up. I had ideas about where this might go, and one of them was this trend right here, this intersection. And so it's not that I think it's a bad play, it's just that I had averaged down. Again, if you were shares only, you probably did really well on this because we bought in really low. And shares only would have, honestly, could have done better than the options, because when we bought in, the opportunity down here and here was around $11. So, I mean, you're up to above $11.50, $11.70 this morning. I think it was $11.86 or something on the high. And I got out right this morning on my options because options have been kind of getting crushed. So I had averaged down my options because they just weren't going anywhere. And I got them down to like 3 to 4 cents a contract. I want to say it was like 3.5 average. I sold them for 5. It sounds great because it sounds like a 60% gain, but when I went back and crunched the numbers, it was more like half that. I'm not really sure why. I'd have to kind of look into it. Maybe it was like fees and junk kind of cut into it because I made a lot of little trades. Anyways, Fang is another one that's on my watch list. I've been waiting for that pullback. Does look like some kind of a pullback happened this morning. It's not substantial by any means, so I'm not sure yet. I still think this is a potentially really good trade as well. So I'm done with AMD. I'm out of that. I'm going to maybe reassess if it comes back up here. I want to keep eyes on it, but for now I'm kind of looking at Apple as like the next big play. So we'll see where that goes. MTTR was one that was on other folks' watch lists. It's up to 515, so it's hit that first trend, and it didn't stall out. I guess it did a little bit. It kind of stalled out here a little. If it breaks above 520, I think you're in good shape. You'll see it continue. RIME was requested this morning, and INVZ. So RIME looks like it's in a bit of a free fall, just looking at the price action alone. There's a lot that we could do today with trading if certain things happen. I'm really interested in looking at Apple contracts in a few minutes, but we'll take a look at that. Yeah, this is a split. So it looks like it was split to probably keep it from going underneath $1, and then it just came right back down from like $7-8 up here. I mean, it was at $8, and now it's down to 3 cents, and that's after the split. So definitely not the most promising. There's probably a heavy amount of shorts invested in this. It did make a decent stand around $1, but you know, it's tough because these things, it's really difficult. I mean, we could do like a financial analysis on everything, but it's usually pretty easy to see when a stock is algorithm holdings. So this is a bank type deal. Yeah, I mean, this is a massive sell-off. Maybe a divergence building on the weekly. This is like a widening. I would have to say this looks like a head and shoulder, so it just kind of looks like it's following through on that. And as a result, there's kind of a wind up and unwinding of those positions is usually what we see. So probably every one of these layers is going to be like a shoulder. So there's one here. So that's the first shoulder, and then the second shoulder, we'll look at this bottom. I don't think it's happened yet, so there may be a pop here. The cat ear itself is always difficult. It looks like it could be done. 1, 2, like it just didn't go. But if I'm looking at these shoulder marks, they should be there. Yeah, it kind of already walked down to the third shoulder, so maybe it won't have it. This is the weekly, so it's not a complete picture, but it is a pretty decent picture of what's going on with this sell down, especially from, I mean, that's just bad. So that got really overbought, only up to like $2 from the floor here. So it's struggling. That's a liquidity crisis, basically. Yeah, the dead cat bounce might be pretty substantial, but as they call it. Yep, looks like a really simple like double top followed by a sell through. So like a big 1-2 followed by a sell down. I could totally see why this is appealing because it is very oversold. However, this has stayed pretty oversold for a while in the past. Like I'm looking back here, there's like 1, 2, 3, and then it was like the fourth oversold, and then it took a really long time. This is from December 6th all the way up January. It's a month. So that was holding for a month. You would have seen a pretty substantial profit if you had bought in here. Assuming you didn't sell, that would be like 300%. But it took a long time. So there's a liquidity crisis here. It's very weak on the part of buyers. They're just putting a lot of effort into it, and it's not yielding great results. That's what I'm trying to say. So how do you trade this? I mean, it could be like a set it and forget it kind of thing. I'm going to go to a different time frame. This one doesn't look too good to me. You set it, forget it, see if you could get a good return on it. But I think the best thing it has going for it right now is potential divergence in price and RSI. And the problem with that is, again, you can't say it's there until it's there. Like you have to have the reversal. So there's a question of like, where is that reversal at? I think when you look back at what we saw on the weekly, this is really where the trend starts. So I think this is a widening, like a widening spread. So potentially this thing could go down to like sub 1 penny. I mean, if it just keeps going. I really would have to see what's going on here. That's weird. That revenue's super low, 10 million. I mean, that's tiny. That's really, really small. So maybe a potential bounce in store here. This looks like the primary trend. You can see there's very, very clear indications here and then also here. And I think this is just an SOW, sign of weakness, before this took back to the upside and then went down again. So it was like kind of like, oh, we're going to go low, but first we're going to do this. So this marks off like a later trading zone. You can see what it did right there. It marks off a later trading zone that we're going to walk through. But the primary trend is certainly here. Actually, it goes all the way back to this guy. So this is a pretty strong trend. So I think there's a decent chance it's getting that point right now. Again, it does not mean that it's going to just bounce, because sometimes this hits it and just coasts. Even here, it was oversold and still went lower. It's entirely possible that this gets really oversold and still comes down lower before reacting. Let's check the 4 hour. Let's see if that looks any better. Right here on the earnings report, it says reported as 10.62 million. Estimated was 19 million. Miss of 8 million. It's consistent. I mean, this was 2.4 million, 10 million, 4 million, estimated 13 million. Doesn't look like a huge amount. So, I suppose the rest of this would just be determining if this is even like operating on a wave, and it's kind of tricky because we really only have one. I'm going to just do this, and this is way down here. This actually just looks like a parallel. So that doesn't work. Yeah, it's not the best. So this is probably pretty accurate right there. You can see it's definitely indication that there may be a bottom coming in presently, going into this next Monday maybe. And then I would look at maybe look at this as one possibility, and then as a lower, kind of more conservative possibility. And then this is probably what we're looking at for the cross there, because this would have been a dip beneath it and then support on it. And you can see where the support was actually found. Let me use that one. It was right here. And that's where the hook is too, right there. So I think this is fairly accurate. I mean, the thing is like, I don't know why a company like this goes public at all, to be honest, unless, I just don't know. It feels kind of silly to me. Yeah. All right. So, hang on a second. I don't want Fang. I mean, Fang's fine, but I don't want it on the screen right now. I kind of want Wolf, because I think that might be an entry soon. All right. I mean, so this is, I think, correct. It's pretty close. So what I'm doing is I'm measuring from bottom to top here, and then what I'm doing is taking that and seeing if that matches what we see as like a cross, here, and that's true. So it does. So therefore, I think this is a valid creek, and it also intersects this drop. So there's a gap here between the two creeks, one up, one down. So that bridging of the gap is really confirmation for bears that you were heading back down. is it lost that creek. That's a big deal. When we talk about the cat ears going up, if they come back through that creek, it's bad. And then this is going through that ice, that bottom support. So it dumped pretty far. So in concept, it may be that this is kind of a middle. And I think this is, again, pretty close to as accurate as we're going to get. Does not guarantee much, but you know what I'm going to do? I'm going to lock in back here. So that's really high. I don't know if that's correct. I'm going to go to this low. If I can get it. It doesn't want to give it to me. Yeah, well, what are you going to do? It's weirdly like long term. So it already dumped beneath that. So I don't know. This is a bit of an oddball. I think the reason why this might be part of the reason why the liquidity is so high right here at the bottom, like right after it dropped through that creek, because this would have been the cross on the wave, like the more accurate cross. Doesn't mean it can't go below it. It's just that would not bode well if that's like the new normal. So it has to recover above that value here at like 4 cents. Because if that ends up becoming like a new normal for the middle, which I doubt it, but if it did, like I doubt that would be that low. It could be substantially lower. And this would indicate that the, that trend has indeed widened quite a bit. So I'm going to suggest to you that if you're looking for a quick swing, this is definitely far from a sure bet. Yeah, right there. This could be going down to sub 1 penny. I mean, I'm saying that right now it's a very difficult one to call because technically it might have a bounce up to near 8.5, 8 cents, but I don't think that's a necessary part of this. If this holds and it looks like it's trying to, then this could be like kind of a final sell-off. I mean, it's basically going bankrupt, right? Is what it looks like. It's going to be delisted or something. Or they're forcing a reverse split or something like that, a split. So I can't guarantee anything with this one. I mean, here's what I would suggest, okay? If you're going to trade something like this, is only put in what you're willing to lose. So, I know, but those numbers, they're only half the story, right? The other part of this story is that there's a deliberate effort here to establish like a new middle, and a new wave. So like this particular sign of weakness early on should not be ignored. This may have represented like a desire to kind of widen this out even further, in which case this is indeed the middle, and it is accurately the middle back here. So is there a stronger trend? Yeah. This green line, in my opinion, here, let me do it this way. This green line, in my opinion, is the stronger trend because it has much more holding power. Buyers and sellers interact with this a lot more than they interacted with this bottom. But this weakness, as you see it, could be an attempt to widen this whole thing, right? So this is like a massive volume effort, right? It's not even oversold yet on the 4 hour, and they're driving the price even lower. So I would imagine that, there's some kind of an interaction here, but I don't know what that looks like just yet. So if you're lucky, you get some kind of a massive reaction, yeah, maybe it goes up higher, comes back up towards 6 or 7 cents before coming down lower. But for what I from what I can see, I don't know if that's 100% necessary, you know. I'm really just kind of guessing anyways, because to me it looks like they've built out this kind of new middle. And that's what makes me, I guess, the most concerned is that idea that, you know, and who cares about a gap at this point? You know, it doesn't even really matter that much. So maybe, again, maybe like this one saw that free fall, gets a little bit more oversold, and then you get kind of a reaction back up. I just don't think it's a great trade. It's a trade that, again, you have to be willing to lose all of that you put in. And I don't know, so like, would I be willing to lose thousands of dollars with the hope I'm going to gain thousands of dollars? Probably not. And you can see it's already jumped over this creek, and yet it's still persisting down. That's a big deal. Like when AMC started doing that and it started jumping over creeks and then persisting down, it just kind of tells you that there's a pretty bad weakness there. You know, like something's wrong. No buyers are buying it up. A creek jump should be met with a lot of buyers. And if it's just met with a weak attempt to kind of push up that fails and sells off, it's still in markdown mode. It hasn't yet finished maybe defining its trend. So it's just another like step, right? So how do I trade it? I don't know. You know, it's gonna be difficult because even if you saw it as oversold like it was back here, it still made lower lows frequently than if you had bought in when it was really deep red on the 1 hour. It was like, yeah, that ends up being kind of the middle of a range. So maybe there's a better time frame for it, but it's a penny stock, so yeah. Maybe this is a good idea. 30-minute looks okay. Like it's got pretty major swings, at least you can visibly see, that go between roughly being overbought and oversold. 15 looks even better to me. Yeah. So on the 15-minute time frame, it does look like it's again trying to build its way back out. It's still coming down. But, you know, then again, if we're using RSI as like an indication of whether or not it's of good value, this has already come back to the middle. Like this would be like the middle of that move down. So this has already come back to the cross down, you know, roughly, or close to it. I mean, it's pretty close. So look, if you want my opinion is it will see a reaction to the upside. But if you're just looking at the technicals, there's not really a good case to be made, aside from maybe these really low time frames, that this should be going significantly higher right this second. I just don't know if I can make the case for you. So yeah, this just looks like a lot of things to me. This like curve outward, it could easily result in what we see back here, where this is coming down and it finally like builds out far enough and then it holds and it goes quick. And that's what I'm saying. I think that's what it would look like. So I've got this going like way out here, but it'd probably be like super fast if it goes up. You know, something like this. And then drops equally as fast. But another part of me is like, well, that could be just a completed ear. Like it's already tried to push up, failed, now it's got room to come back down. So it's just a mixed bag, you know. Hourly is not that oversold. Again, I feel like this one is probably best traded as a like a breakout trade, not just YOLO or whatever. As I get the appeal, I see the divergence, I see that it's building out, this is going down. But let's say, for example, that we think this could go really low, potentially down to like a penny. But before it does that, it's going to come back up. What would you need to look for before you entered into that kind of a position? I think one thing would be the shorter term, and I'm going to change this coloration. That's not a good color. Let's use like a red or something. So one would be the shorter term move out. So this would be like an M that presumably is crossing this downtrend, right? 1 didn't quite make it, 2 makes it over. You could use a localized M here to test that theory. It's okay. Still, to me, it looks like it maybe didn't come low enough, but you could argue, I guess, it's close enough. Or if it does come lower, it's going to be like not that significantly lower. Maybe 3 cent 2.5 instead of 3 cent 7.1. And then what I would look for is a break above this area right here. So I suppose if I were trading this judiciously and trying to make like a good trade that wasn't jumping the gun, it would be here. Even though you lose out on a couple pennies, like, it is what it is. You maybe ride it up from 4.5 up to like 6 cents or something, and you get like a 40% swing on it. Does that make sense? But from where I stand, like on the big picture, like way zoomed out, it does not look like it's falling wedge. Here, you mean? Yeah. Like maybe. I just don't think it's going to obey every technical rule. So. And if I'm wrong, then if this did obey like every technical rule, then what I would expect is that this yields maybe a push up here, and then potentially we'll see, you know, what happens. Potentially that could be like an auto reaction, and this could start forming out like a new. Again, just based on liquidity, I would suggest it probably would have to spring, but this could form out like a new, you know, markup phase. But like, that's best case scenario. I'm just saying that because based on the way this has traveled, this hasn't really indicated that it would do that. Not yet. And by the way, I'm making it really fast, but this could potentially be like really long-winded. You know, I think that's a given. So there's a lot that could happen here in the next couple of months or whatever. I've drawn it out over like a week, but I think there's an earnings, right, coming up. So anyways. Yeah, that's that. I don't got anything else about that. So maybe just to recap really quick. Big picture, it's definitely been oversold for longer periods of time. Small picture, it's already kind of jumped its creek here. So if it manages to reverse, that's what I'm saying, it already jumped this creek. So if it manages to come back up and reverse this trend back above 445, I think it will go. This is going to be that level, right? Because this is hitting like that kind of critical liquidity zone for a number of reasons, and then you could see it react back up. But I don't think there's a good trade until maybe like 4.6. I'll put an alert here, and we'll check it out if it comes back above. It may just go, you know, if it comes back above 5. or 4.5. It's just that this has shown in, that's what I'm trying to say. If you have a good pattern, that's fine. But if it's historically shown, and it has, that even after jumping a creek, it still persists on going back down, then that's not a good sign most of the time. And to suddenly expect it to like obey technicalities would be a bit odd to me. So Apple was one that I'm heavily considering right now. I think it's a potentially really good buy. I want to see if I can set this trade up. I'm not sure what to expect exactly, but my guess would be something along the lines that I've drawn here, which is reasonable. The 4 hour looks like it's kind of double bottoming on RSI, which is fine. It would be divergent, but it would be like a weak bearish or weak bullish divergence. Massive sell down going into this bottom. MACD is already coming up from the previous low, so that does look divergent on the 4 hour, but again, you're not done yet necessarily, so we don't know. Like, we don't know if this continues down. I think it's at the creek, so I think there's a decent chance, like long term, I was saying this earlier, that it's even possible, like right here, and I don't know for a fact it's going to do this, right? But it's definitely a possibility that we make a similar drop that we did in August of 2024 to kind of come back low and test these bottoms. This to me could be a sign of weakness that could indicate like a very, very far future trend down. You know, the one thing that gets me on stuff like this is that, it's Apple, right? It's like, do you think that it's going to necessarily go that low? Here's what I'd say about this. This has a very large weekly RSI divergence, and the volume has been dropping steadily for years. So, like, long time. So when I looked at the weekly, it was like, wow, that's kind of weak looking. There's a consistently long-term downtrend starting in like 2020. It looks like an M, like a ear with a 1, 2, 3, 4. That doesn't mean it's going to go down indefinitely, but what it usually would signify, this is what I'm looking at. So this is the peak value, right? And then you could see a shallow ear here, a drop low, and then a shallow ear here. This is a very, very common, and each of these second ones is flat too, which is kind of nice because that gives me a sense of continuity with the cat ear. So like, I find that to be comforting because it means it's a pattern that I'm pretty familiar with. Should be fairly easy to read it, even if I'm not like perfect. I've got a much better grasp of this than I do some other things, right, in the market. So I find this to be a really comforting pattern to read, right? So what I usually see is when I see something like this, is I see and you can see where this started. I need to zoom out a little bit. I'm going to see if I can frame it better. Yeah, it starts back here. So what I see is a wave, right? Let's get rid of MACD, because even though this is important, I'll talk about why in a second. This MACD has actually done a better job in some ways of identifying potential bottoms than the RSI, which is important. But for just the illustration, I'll talk about this. This looks like a wave to me, a really straightforward like sine wave, which is nice. So what I would normally expect on a pattern like this, looking at those cat ear formations, is that you would come down and retest this here. Even if it's like super bullish and it's going to go again, this is usually my expectation, is that this wave, and it is, you can see what I mean, would come right back down. So the pattern itself isn't really complicated. It's just a wave down. And I don't think it goes below here. So even though, yes, this hasn't been oversold since 2018, and it's certainly possible it gets oversold, we could look at this as sort of a judgment of where do we think it might end up, maybe around like 3.9, 3.5 on a RSI, which would make sense. It's kind of where it was when it was in the middle here. When I look at RSI, it makes the price action seem like, oh, it's not going to go that much farther. And I would say, yeah, maybe not. You know, there's a long-standing trend here from way back. There's a weekly 180. I think that's what this is. I mean, that's a long-term, that's a huge long-term, because in order to get a weekly 180, you have to be around for a while, right? I mean, you have to have more than 180, right, to get a good read on it. And then you'd want that consistently over time. So this is a very good long-term trend of support that we ride above when we're bullish. So with that in mind, it's like I could definitely see how if this comes down low and it comes for the next creek down, based on the trajectory that it's going now, that this might be heading towards sub 200, probably around 187. Long term, it might seem like too much, but you have to see where the rally starts. And again, that low back here at 124 would be the rally mark. So this would be like all one motion up. So yeah, 164 becomes like a shelf of importance. This is a spring. So this goes up, springs, comes back above the top. So there's another potential place of importance, which is the next 618. So this value, why is it 618 values? I don't know. Just the way that it is. Then the next place of importance is from this bottom. So this is the next wave on the M. So we did the large M. This is the bigger wave down and then up. Now we're doing the smaller one down and then up. This one has a 618 where I've already kind of drawn it out, which is right here around 193 to 195. So when I look at this, I'm like, okay, so what exactly does that mean? Well, for one, I would say that normally, even though the RSI seems to suggest you would come all the way back down and reach this previous bottom, right? I don't think it's going to be one-to-one. Like, I think that it's probably going to get to that low around 35, 36 well before it ever gets down to 123. There's not going to be a continuity there, in my opinion. So it's very unlikely to me that this comes all the way back down to 124. I think that would be a bit of an overstep. Larger wave may suggest that, but I'm not getting there yet. I haven't done like a monthly yet. There could be an even larger wave where this is like all part of a larger second half, maybe. But I'm not there yet. So I'm just going to stay on the weekly and just kind of work from here. So this would suggest that it's pretty unlikely that this comes back down this low again. This would be a major retracement. So that creek is not, in my opinion, is not the most likely. So even though, yes, RSI looks like it would probably come back down and hit here, and we would certainly want to see that moving average kind of catch up, right? And a good example of that would be looking backwards at what happened on these two bottoms in October, and then again in April. So this is October 2023, April 2024. This is where you have an MFI divergence on these two bottoms. RSI doesn't diverge, but look at how it approaches the bottom as this moving average is coming down. It's still like slinking down in the M shape, slinking down in the M shape. Same thing both times, and you get the same kind of motion down. It lets that moving average kind of catch up and hit that bottom. So I think that's pretty important, and I'm going to keep that as part of this patterning because I think it is significant. So in a similar way, even though, yes, like there's a bit of a widening spread, it's really going into the top, right? Because this is hugely divergent. Like this is coming down, this is coming down, this is all coming down, and this is still going up, and that volume's dropping. It's just kind of running out of steam, right? I would suggest that there's probably going to be, again, the same kind of reaction here, or a similar kind of reaction here, where you have a drawdown period, right? And then during that period, this is coming maybe even below this marker, but it's bringing that moving average down. It's pretty likely until probably later in the year, at least a couple months out. April is what it looks like to me. So is it possible it just turns around and advances? Sure. The reason why this looked attractive to me this morning is you might be thinking, well, that means long term, it's a put play. It's not a long play, right? It hasn't come back and retest certain levels, so on and so forth. Yes, that's true. But in terms of like where that reaction ends up being, I think there's only a couple different spots that I would look at, and I would say that most of it's right here. So there definitely would be a strong sense of continuity if this comes to like 185 or 186. I think you'd have a good chance that that would meet that moving average, and that's really where the biggest buy-in probably is going to be, where you could potentially start a new long-term trend. So I don't think it's going to be way down here. I don't necessarily think it's going to hold perfectly this top, though it could. I think what's likely is it's somewhere between 193 and 183. And that's the range that I see it coming back to shorter term over the next few months. That doesn't sound very appealing, but again, it is what it is. We can use a smaller time frame to see if that confirms, because if that's going to happen, there should have been somewhere in the midst of this wave right here, the lower M cross, there should be some kind of confirmation of that. So what we're going to do is look for those shapes. So this was the first push up. This is another one here. So this is kind of your 1, 2. The second one being like the cross. So that doesn't really support that low, does it? It definitely does if you use this bottom and suggest that it went away from it. This is the one that's kind of dominant in the middle. There's like a few different hits on it. Yeah, that would be right around the center. 1, 2, 1, pushing up again to cross over here. So this doesn't really support coming down that low unless it's like way later, like again in like April or something, unless it was way over here. So that's a pretty big window, right? So that would suggest to me that before this gets to the bottom, just like in the case here, that you're going to get some pretty massive reactions out in a way. Like I don't think it's going to be subtle. And the daily is already oversold. So just like it was back here, it's already getting oversold. And that both of these yielded, on the daily, yielded some big reactions up. It's kind of the same spot, isn't it? If you look carefully, it's really the same idea. Granted, this is happening off the 180 on the daily. So there's a bit of a difference in that we did not react just yet off the 180 on the daily. We pushed below it. But this is the beginning of that walk down right there. So interesting. Anyways, I think it's just going to react. I think it's going to go back up and fill the gap probably. Worst case scenario, I suppose, that this keeps selling down and gets stuck beneath this 180. And obviously sellers have already dumped it below. So that could mean that it's going to sell further down. Let's see if there's any. Yeah, some of these are like that, but these are on markup periods. So this is an example of one that dropped down below, then it reacts back up to fill the gap right here before continuing to mark through it again. Same thing here. This pushed low first, then it has a big reaction, and then it drops down through it. Really, both of these just kind of go back to the same area that it dropped off of. Well, that makes it easy for us, I think. Really easy. So I'm in the business right now of trying to find really good trades, and I think that Apple is about to pop back to the upside. I don't think it's going to go up indefinitely. I don't think that. It actually looks like in the past it's come back up to like that 59 level. Seems to like that spot. I don't think it's going to go up indefinitely. I think it's bound for kind of a future of downside longer term over the next few months. But what seems very likely to me is that this is used in the earnings report. So there's an earnings report coming up on the 30th. If I have to make a prediction, I would suggest that this is going to drop into that earnings and then have a hard reaction back up. But by this point, it's going to be beneath this 180. And maybe that's where the turning point could happen if, for whatever reason, it reacted and this came up higher and then made a higher low. I think you could probably argue that that positively. Yeah. Where does this go when it comes down? Let's see what happened back here again. Hang on. Yeah, so this is already kind of chopping down. Same deal. It's a really similar pattern here. Both have this like kind of middle ledge. This is actually very similar because this is at a similar kind of earnings setup in February. Really, it's almost the same. There's a big reaction up, and it comes down into earnings, and then you get a reaction on earnings. It's positive, but it ends up chopping back through. So maybe it doesn't come that low, and we actually stay pretty elevated, and this works its way outward a little longer. Yeah, I think this is the next big play for me. Maybe Wolf. AMC this morning's at 3.56%, or excuse me, 3.57, and it's kind of a mixed bag. You know, like we had this pretty gnarly sell-off end of the last week. When I look at the chart on the left here, it just looks like a regular pullback. And this is on the hourly. It doesn't feel horrible to me. I mentioned last week that, and you know, I think I scared off some of the bulls maybe at the end of the week because they're not here this morning. But there was a lot of bullish attitude, and I was just saying like it hadn't even jumped this creek yet. It never did. It never pushed outside that trend. So, and if it did, it was like barely. But I think it just touched that line. So there's just a lot here that needs to happen in order to confirm AMC breaking out. So if you're wondering about AMC this morning, that's really all there is to it. There's not much else here. Do I think it probably has another push in it? Yeah. We talked about this last week, and we had talked about what would happen if it came up early. I don't think this is the right chart. This is like an older one. Hang on a second. Where was the one that we were using? That ended up being kind of scary accurate. This is the one. This is the one we were using. Yeah, this is what I predicted for the end of the day Friday when I got off the stream here. I said I thought it would come back up to like 360 and then walk back down. It's like exactly like what happened. That's freaky. But it was set up in the chart, right? This is the way it travels. So it would have come up for us, drop back down. I'm not liking that there's this gap here on the 6 minute right around 353. Just unnecessary stuff, you know. So if it did come back up, we were talking about reactions back to probably 367. So we may see at some point today, like maybe this comes down, fills that as a back test. We may see 367. I'm not positive we're going to see more today, but this seems likely. If it can hold that level, that's the creek jump right there. We should see a good reaction, like right there. So, yeah. This is crazy how it did that on Friday. And, yeah, otherwise I think it just looks like a pullback. So, you know, we would expect there to be probably a couple crosses to the upside. This might not even go all at once. It might push out. There's another wave right here. It may push out and then kind of come back down. Check that top at like 363 and then come backwards. That's pretty much the day. I mean, maybe it goes up today, but to me, like that could be it today. I mean, it's not the catalyst we wanted, so there's that. What about all these other things, right? Well, they're not gone. I mean, you have to take into consideration that these still are there. There's bullish trend here. But for now, we've already lost what I would say is like the main kind of parallel structure. So if you're looking at like bare minimum, you got to cross back up and over. I don't know why I did that. I should have just extended it out. Yeah, bare minimum, you got to cross up and over. And I think we were talking about this maybe being the middle. So let's do this. Let's rechart this other part because I think this is not helpful to see all this stuff now. So I'm going to get rid of everything except for I'm going to get rid of everything. This is pretty darn accurate. Happy that it happened, but we don't need to sit on it for a while. It's there, right? It happened. So this ends up pushing outward. Yeah, this is ugly low. That could be an issue. There's also, I think, a little bitty gap down here too. So there could be more downside even. It would be like coming back to 346 again. It makes sense. That might be the case. We were right about everything else. I mean, the places that it held look good. This reaction off the bottom looks good. See how it came off the bottom here? It went low, then it made a higher high, and then made a higher low. It was geared for a nice pop today to the upside. And then coming backwards, it's just got to hold this creek. But I'm a little concerned if it does not, that it probably slumps down again to this floor. I know it's very much like flip of the coin, but I'd have to wait and see what happens when it hits this mark right here at 350. So if it doesn't hold 350, no bueno. I think it'll come down to like 345. And then this just really looks like a giant head and shoulder, doesn't it? Like 1, 2, yeah, 1, 2. So walk back down. Could be, this comes really low. I mean, the thing is if this is a wave 1 of an impulse, right? Let's say you had an impulse that began here. Then you have to then take into consideration that if that's the case, yeah, and this drops 350, it's right where it would be, wouldn't it? This is going to come down pretty far. So when I look at it, I'm trying my best to be as non-biased as I can possibly be. Yeah, and then I'm going to suggest that this is important for some reasons. I'm not going to get to just yet. So far, it's kind of holding where we thought it was going to hold. But if we continue to see sell down back through 350, I think we're going to go fairly low. There was some other creeks here that just never got tested. Like this one really concerned me, you know. So it just looks like a potential for hook and drop. This would be a very bad way to go, but it would happen like this. Because you'd have a weaker shoulder here, and then it would come down. Yeah, this is not good. So if this turns bearish, it has not yet, but if it does, there's a decent potential this comes pretty far down. It looks like it's targeting 318. And this is probably just structural right here. It wouldn't get there at this time. If it does get there, it'd be later. And these are the parallels for the head and shoulder. They're set up pretty solid like. This doesn't always play out like this. You know, it's not perfect, but it can be fairly close to right. So, especially if it keeps pushing low, you might expect some stuff like this where it like makes a weakness and then comes back up. So the thing is if this were an impulse, right, then you would suggest that it starts with a wave 1. And the wave 1 can have some of the deeper retracements. So it's certainly, this would give us a lot of credibility, right, in what we just illustrated. There's a strong connection to the golden ratio, golden pocket here. There's also 786 hit. So I've got it in the right place for what it's worth. So there's a potential, if it comes below, it's not aiming like super low, but it's going down there. And then if it doesn't, if it can hold, it may stop as like around 328. The rest of this triangulates perfectly. So I think that wisdom here would just be waiting until 350 holds and pushes back out. And I suppose it could be as soon as now, but I would have expected it to come a little bit lower and like check this out at least. If it doesn't, whatever. If it makes the advance early, whatever, you know. JOBY crossing 895. I don't know what that is. I don't remember. Jobby. Oh, this is one of the aviation stocks. Yeah. Yeah, so this is one that I said might be a potentially good put play if it does not break back out of the top, or if it like comes above and sells through again. Doesn't mean it is going to work out, but it's definitely a potential put play here. Yeah, we talked about repeated up thrusts would probably happen. It was one of two that we had looked at like this. There were two that had a very similar setup. The problem being is that this came to like a historically very volatile level. Like this is a drop zone here back in 2021 at 950. The build out itself looks okay. This could be considered like a auto reaction, phase B, spring, retest, push out. But it comes really, really far back down, which is strange. So usually, if we're talking about into the range, you don't want to see it come back like 50% through the range. That's usually not the best. So while there is potential here to see something major to the upside, I was inclined to say that I thought that what seemed more likely was that this would end up coming back down. It did struggle for a while, but not forever. That was another thing we talked about. Was it's not like a long-term bearish setup. It was more like there seemed to be a potential need to drive the price back to this top, maybe even lower at like 5s, and check again that floor. That makes sense. This has been largely a contested area. So it would be stronger longer term if it goes ahead. I mean, it did check it once. You might say, well, shouldn't that be enough? Maybe. But I'm more concerned about the fact that it's repeatedly come up above and not held it. So yeah, and then there's a high volume. There's divergent RSI here. I think over 10, it's got some pretty good chance of holding on, but this is a strange chart. If I'm wrong about it, it ends up being pretty bad, like really wrong, because if I'm wrong about the nature of this push out and this buy in here, which I think looks more like selling to me, is just high volume tops. If I'm wrong about it and it's actually breaking out, then it's getting ready to gearing up for like a potential leg up. Then I'm like way off base, right? Because this could end up being like an S curve. It goes up to like $14 or something. I suppose the best way to determine that would be if it crosses back up and over this marker, which has been now drawn out for us. We don't need to guess where it's going to be. This would have been the trend that was lost. But if it doesn't, then this ends up being a series of like up thrusts. It's easy to see this coming right back through here, and then starting to walk its way back down to the floor. So I had said that it may be a head and shoulder type deal, and this is coming up to hook. It does look like a hook. I mean, it's what it looks like. There's a lot of maybe interference right now because of the way I charted this, but that is where it should be, if it hooks. So yeah, so potentially this is about to free fall back to the bottom. It's really a matter of like the head and shoulder confirming, I suppose, before anything else, but yeah, it's hard to say. This would have to come all the way back through here. There'd probably be some kind of like a weakness It would chop up, and then it may not stay there that long. And this would be like the walk down here. If it comes that far, it's probably going to go all the way back to the major creek test. So this is the one that I'm like thinking is really actually kind of a good thing. If it pushed and tried to advance and it holds on to those buyers, it may not be a bad thing at all, because it may look kind of nasty, but at the end of the day, you really want to see it come back and sort of retest those levels. All right. So I didn't finish my thought on AMC, but I needed to look. So that's up 10%. It's a big move. The people that had asked about it were bullish on it. And I'm not long-term, I'm not bearish. I just think that short-term, it seems to be lacking something here. So the put play itself doesn't really activate very much until like here. So if there is a put play, it's kind of the last leg of this, unfortunately. Like you could try to do it based on whether it's oversold or overbought, on like a smaller time frame maybe. If it's got the swings, yeah. This has been pretty consistent when it gets overbought. Pretty consistent in selling back down. So I had guessed it would get overbought when it hit this top, which makes sense. But there could still be like another leg up here. It wouldn't kill it, you know. And actually, we have enough information here. I think we should just do the timing of it. So a lot of times with a head and shoulder, its timing is pretty close to the same. So I've got this like way out here, but so that's pretty fast. That makes it seem like it would come down like really quick if it does come back down. If it doesn't break above, right? And that's the question. I don't know yet. It might. It fills that gap or something and then comes back down. You have to move pretty fast, you know, to get down here. It didn't fill this gap. There's a gap at $8. Anyways, something like that. Let me see where the middle is. I'm not getting the accurate middle. There we go. That's better. Yeah, it's still like right now. But this is a massive straight up move. So the right side of this shoulder on the left is long-winded compared to the other one. It may even be more accurate to kind of consider all of this, since that motion on RSI is all one piece. All of this is like one piece, potentially. That gives it a lot more time to like work itself out, again, potentially. So on the 1 hour, when this thing gets overbought, and it does look weak, you see the volume on here is like weaker than the volume on the left. So for now, it looks like it might follow through on that. Could change. It would change very dramatically if this comes above here. That could be a really positive sign, especially if it holds over top, like I was saying. It could be there, it could be earlier. This is another one though. It could be a really great entry for a put if this breaks down. But I think that the problem that I'm seeing with it right now is that I just don't have a great ideal entry. There's a gap at 826. There's another gap down here at 8. Beyond that, it's whatever. It's probably like a multi-stage trade, where you would trade like down and then let go and then trade again down, then let go and then trade again down. You could hold the whole time, but in the end, it's kind of, that's risky, you know. Another place this could potentially turn green is right here. So if it went back down and it doesn't fulfill the head and shoulder, but does kind of hold its own and break back to the upside, then that would be like a major reversal. And that would probably, again, continue back to the upside with some serious strength. So, yeah, that's a potential there that could happen, but who knows? We're not there yet. Let me go to a smaller time frame and check it out. So 30-minute is fairly close to the 1 hour with regard to the overbought, oversold nature. Pretty close. 2 hour. So 2 hours definitely got a lot more headroom to the upside. I'm going to look at instances where it pulled back, but it did not get over. Like right here, it pulled back, but it did not get overbought on the 2 hour. This is pretty close. Same deal. To me, this looks like the whole shebang. Like, this is just one big jump here. And now we're getting like a hook. Right there. See, I'm just not convinced it's bullish yet. If you look at it from the point of view of like big picture, like is it jumping creeks? Yes. Is it holding those creek jumps? Yeah, for now. But it seems to be doing it on quite a bit of weakness right here. Like, I don't like that this is all positioned down since it first started in November. That's a longer term, 2 months now, bearish divergence that just doesn't really sit very well looking at this top with the high volatility and high volume. Same deal on the 4 hour, except that on the 4 hour you would raise this up to meet the same kind of criteria. So again, similar region kind of working itself out. So it's certainly reasonable to expect there could be some chop right here before anything happens. Maybe a bit risky. It's moving really far on very light volume. So not a lot of effort, but a big reward. I'm going to check. Let's see if we can look at something else, because I only have the one indicator. Let's just get a companion indicator on here and just take a look. Let's look at the MACD. MACD's kind of the same deal though. See, it's coming down. This looks like it's trying to hold on. Like, this is a big sell down. It's trying to hold on and turn back up. But if it rejects, I don't know. Just hasn't really done enough down yet. It's similar to what happened here. There was a double push up. There was a divergence in RSI, divergence in MACD. This came low. It came back to the beginning of that move. Once it crossed back up and over, it starts taking back to the upside. But the scale of this is much, much larger. Like, significantly larger. It does not look like, to me, it's finished Because this is like the hook right here. Doesn't even look like it's finished a hook. So yeah, maybe this doesn't come all the way down. Maybe we just get down to like this bottom and then it doesn't actually break down, you know. Maybe by this point the indicators are all oversold again. That would show some serious strength that like bears are trying to fabricate like a sell down through head and shoulder. It's just a thought because I'm looking at the previous setup and I'm like, it doesn't necessarily have to fall through all the way if it can hold its own. And I'm also wondering, there's a trend here that I haven't drawn. Yeah, it's pretty low. No, see, that suggests that you would come back. And that's a parallel. So these are not really in favor of bullish continuation unless you get back above here, like we said. So I think for us, and it'd be a really dangerous move to trade because it could just be a UTAD. You could see potential, and I hate to say it, but it's kind of a toss-up because if you came up, even though that might look really strong, that could be a UTAD. Because this came down and hit bottom and then hits bottom again and then hits bottom again. It's like keeps making lower lows as it's chopping down before it breaks back out. So it's got a lot to prove up here in terms of holding supports, things like that. It would have to hold here. And if it does some kind of a weird up thrust, it just becomes this UTAD. And that's just the nature of the market. Like, it may be annoying because you're like, well, why can't you predict that? Well, you can't really predict it. You could predict it might come up if there's enough room for it to come up, but then once you get up to the top, you really have to wait and see what's going on. If it holds there, it's bullish. If it doesn't, it slides back through some creeks. It's going to be really bearish, you know. So, yeah, I'm not seeing any confirmation on 4 hour. It's just kind of compressing. So if it rejects, comes back down, pretty decent chance this is bearish. It's going to come all the way back to 8 from 9. As a put play, if it hits the gap, let's say, for example, and goes to 946 and then comes back down to 8, for example, that's a 15% drop. That would probably be a decent put play. I just would have to see what the contracts look like. Right now, I have no idea. And frankly, I've had less luck with put plays because sometimes that volatility hike really hurts, even if it's an ideal setup and you're like obviously right about it and you've got the direction correct. Sometimes those contracts just don't come into line with what your expectations are. So you might expect, oh, it's going to drop 15%. Like I'm going to make a ton of money on a put. But then you actually get to that point, you're like, I mean, it made the move, but the put didn't really move the way I thought it would. And a lot of that will have to do with the delta and all that junk. Your Greeks. Yeah, I'm pretty sure, though, this is going to come backwards. Just look at that. That's a really nice backup though right there. I like that. For the bulls, I mean, this is obviously a really good one right here. It's a nice candle. So, I don't know. This is an interesting one. It's kind of like playing against the grain in some ways to say that I think it comes potentially back down. I just don't know. This is a very weird one because there's a lot of obvious risk involved if it doesn't go that way. You could do shares married with puts if you think that it's possible it continues, just continues. I might actually go ahead and look at this though. I'm like curious now. So AMC's at 355. So just to recap, what we said is that we want to see if it holds here at 353 area. And then if not, what happens at 350? Those are the things I want to look for right now. So let's check out the options on JOBY. Let's see what we can see. All right, let's look at the options chain for JOBY. I want to look at Wolf too. I'm really curious. Ooh, that was a big reaction. Low. I'm really curious to see what those look like as well. Fang is going to get to a place pretty soon. NU, I'm done with it for now. If you guys are still in it, you know, obviously I want the best for you. I hope it goes up to at least 1190, maybe even 1240. But I'm out of it. I got out this morning with a very small profit. That's okay. It happens. JOBY. Let's check out the JOBY options chain. So I'm going to look at just a month out. I'm not going to go super short term. I just want to see. And I'm going to do just puts, and we'll do like 20 strikes, and we'll see what we can see here. Earnings is on the 19th, so, you know, a number of things could obviously happen in the next 3 weeks. It looks like the options chain is pretty light. There's not a lot going on here. So let me see what calls. There's not a lot going on into February. Way more calls for like $9, $10. 9 is a big one, which is where we are now. So certainly that's this week. That's the 24th. So there's decent amount at 9 right now. If it continued to run, it could go into the money at 9, 5, and 10, but there's not nearly, there's 2,500 contracts right here at 9 with 500 open interest. There's a greater open interest, 1,400 at 10, but there's a lot less volume. Volume drops off a cliff. It goes to 450 and then 260 when going up to 10. So that's not really enough to like be a big mover. Now going out to the 31st, same deal, more heavily concentrated 9 to 10. So there's nothing like way out there, and I'm not seeing a whole lot of open interest anywhere else. Same deal with, I mean, there's almost nothing. The options chain is basically dead after February 7th. So if you're looking for something that'll come alive later, the 14th, same deal, 9 and 10. And then on the 21st, which is 31 days away, which is a month away, the $10, there's a huge amount of open interest at 10. 2,400. It doesn't seem like there's a lot of bears here at all. So that's kind of a mixed bag, you know. It doesn't necessarily mean that it couldn't be bearish, you know, just because there's not that many bears like currently active. I see a lot, again, around 8, even up to 9, which would be in the money puts. Lots of open interest for 7, but there's very little volume. So like basically nobody's betting on this going down. 7.5 on February 7th has a decent amount of volume, not a lot of open interest. Yeah, 7.5s is kind of the area. So we're getting a little bit of a bracket, and then we've got a huge amount of puts. Ooh, for February 21st, there's a 3,700 order, or open interest anyways, for puts at $9. So that would be in the money puts. So that's interesting, because that could be a really big bearish signal depending on how you look at it. But this options chain doesn't look very good, so got to be honest here. It looks kind of terrible. There's just not enough volume. I may not do it. I may just kind of shy away from it. That's never going to fill. So 9 and 7.5 seem to be the big ones for, makes sense. So this is 9, this is 7.5. I mean, it seems to be the big ones for puts, but there's not enough volume here with puts to really justify it. And I think that it's heavily dominant, or seems heavily dominant to me in favor of calls right now. The delta on these, that's probably why there's 9. The delta on these puts is terrible. $8 is okay, but then it's got really low volatility, so you're not going to get as much exposure. Really, the $9 strike in the money has a pretty decent delta. So the change today is down. I mean, it's certainly cheap, you know. Yeah, well, you can short it, but I don't think I've ever sold anything short lately. You have to work on margin, I think, so I just don't do it. I never short stocks. If I'm short on it or I'm gonna think it's gonna go down, I usually try to do the puts, which is similar if you exercise them, but you exercise the sells. 12 cent. Yeah, I don't know. Let me see if I can get theta on here, because it's not showing theta, which I don't like. I wish it would just show me that. Every time I come in here, it's like the same thing. I have to like click on it. Let me see what the decay is on these late February puts. So it's kind of like basic 101 options trading, but theta delta ratio is probably the easiest one to just eyeball and get an idea of, without going way further, just get an idea of, like, see if that's a decent ratio. It's a good ratio. It's like over 10 to 1. So for almost all these puts. So the theta decay on the $7 a month out is pretty low. But it would need to move. Let me think what that, I remember what the formula is. So if delta's like 10, then for every dollar that you move, you'd be making $100. You know, in theory. Not $100. You'd be making 10. Wait, did I say that wrong? No, for every dollar you'd be making $10, which isn't really a lot. $10 per contract. So if it moved from 9 all the way down to 7.5, you could make $15 on one contract. But you also are paying for theta, so it's losing value every day. But these don't have like super high theta, so there's really nothing to speak about there anyways. So really these $9 ones are actually pretty good, but they're just not, like, you could make $43 a contract if it moves $1 down. That's really good. The problem is there's just nobody buying them, so there's no volume. So even if you wanted to, these $9 strikes in the money, just they're not alive enough. Now an $8 strike, it's kind of splitting the difference between the two. Those are decently active, but I think the bid and the ask here is just garbage. Like, the spreads are too far, so I don't think it's a very good trade. I don't feel like there's enough volume here. Now, I'm going to look at, I'm just not interested in it. I'm going to look at, I mean, you could probably find a way to trade it, but the end of money would be better, but it's like, there's no volume on them. So, and it's still, even though it's really bullish, you know, I'd still consider it. It's whatever. I'm going to look at Apple. I'm going to take a look at that again, because I still think Apple might be the next big trade for me. AMD is still a good trade. I just don't know where it's going to go yet. IWM would have been a great weekend trade. You know, I figured it'd probably melt up if it got above 225. It tried, and it looks like it held. I guess it would have been a good trade, just thinking that through now. It held above 225, and I was saying I thought it would just melt up to 230, so that would have been a good swing overall. Where's my Apple chart? Maybe it was on here. Yeah, it was. All right, that's locked down. So the daily is still bleeding down quite a bit. It's oversold. Let's check the 4 hour. Is it turning up at all? Not really. It looks like it was trying to, and then it failed here. It's kind of down lower. Does look like that kind of M that you might accompany a bottom. The MFI is building out. I think this heavy volume is important. So there is a divergence on MFI on the 4 hour. So that's good. MACD also divergent on the 4 hour if it holds. So for now, that could be the better positive indication. RSI is not really following through there at all. So for now, RSI is what it is. It's oversold, but it doesn't have any kind of clear divergent tendency. Yeah, this looks like it's trying. To me, it looks like it's trying to advance. It may get it, may not. So I think it's going to hit, where did this close? 229.96. I don't necessarily think it hits 229.96, but I do think it hits this bottom at least. This 228 228.03. So might as well just say 228. So I think there's a pretty decent chance it's going to hit here if and when it reacts. So same deal. This has an earnings coming up January 30th, which is just around the corner. So we might go short term. This is Monday the 27th, Friday the 31st. So we'll look at the 31st through February 21st. Let's take a look. So 228 strike. So a lot of puts. Ooh, a lot of puts at 220. So those are in the money right now. There's a huge amount. 17,000 and 14,000 open interest. And that's for next week. That's for the 31st. So there was a lot of people kind of banking on that. Well, let's take a look at calls on that 220 move. So calls, we got a lot of 225s. Yeah, 51,000 volume. Open interest is pretty low on the 225s. Now the 240s have 49,000 open interest. I don't know why. Somebody might just really like that contract. That's a huge amount of open interest. And there's 26,000 contracts at 240. So that's way up here. So that might be because of this gap never filling up here at 240. So clearly somebody out there thinks that what's implied here is that you're going to come all the way up to 240 and go ahead and get that gap. And that this is like a 50-50 marker. They're banking on this rocketing after earnings, maybe even on the day of. And it doesn't really matter because you could take it either way. So those contracts are way low. That might also be a problem because they're at like 5 cents a piece at 240. But the 240 strike is a cheap option. There's, I don't like that decay. Ugh, the delta theta is just terrible. Your theta decay is at 0.04 and your delta is at 0.01. So it has to move like significantly. I think that means it has to move what, like $4? No, it's about half, more than that, a little less than that. I mean, like $3. So you're gonna lose. So let's say you spent $100 on it, you're gonna lose $4 a day. And you need this thing to move. Ooh, yeah, you lose $4 a day, potentially. And then so in order to make $4 back on delta, it'd have to move roughly $4. I mean, it's a little bit less than that. It's like $3.50. So in order for those to get a profitable outcome here, between now and then, this would have to come up at least from like 220 all the way up to 224. They have to at least come up this high, which isn't horrible, but it'd have to do that like, again, like if you're losing money every day and it took like 2 days or 3 days to get there, then it's like an increased amount, right? That it has to come up. So even though that is a very attractive looking price, I think 235 might be more reasonable. It's got a better ratio. Instead of it being 1-4, well, maybe a lot more like 2-5. It's like 50-50. So it's like a 1-2. So instead of like a 2-5 ratio, it's a 1-2 ratio, which is better. And then And this is about the same. So honestly, not really seeing a much better. It doesn't really flip until 230, and then it's over 50%. So at 230, you're getting a better delta to theta ratio. So now it's over the 2 to 1, or excuse me, over the 1 to 2. So now it would be like 3 to 5 or something like that. So 230 strike. Strike down has a better delta ratio to theta ratio, which makes sense because it's more likely it's going to hit this zone, like we were saying, 228s. So 230 is probably a decent one. I could do a little bit more math here and see if the 230 or 227.5 or 225 is better. All three would be able to trade in and out of pretty easily. They're more expensive, and certainly 230 is like a good option there. So let me see. It's a 16 to 9. That's 5-6. What about the next one? 24 to 15. That's 6.2. So you 60% instead of. So, but you're paying for it because it's like one is 30 cents and the next one up is 50 cents. So you get a little bit more, a little bit less volatility, but a better delta ratio on the 227.5 contract. See, I think it hits 228. So it makes sense to me that this is where it's kind of, this is where the contracts really start shifting. So I think 230 is probably a good one. I mean, I like the price point on it. 232.5 is not significantly different in terms of the ratio. It's 50%, so it's really 2 to 1 versus slightly over 2 to 1. So maybe a combination of 230s and 232s. They're 232.5 is what they are. Those are pretty good. I mean, they're not super expensive. So I think you get maybe more bang for your buck because these are 17 cents a piece at 232.5, and these 230s are 30 cents a piece. I mean, I feel like you're getting more bang for your buck, but maybe, let's see here. Maybe I've got it mistaken. Hold on. So this was literally like a 2 to 1 ratio. It was like 0.5, this second one. And then the first one was a little bit better. This is the delta to theta ratio. So you don't have to, basically what we're saying is you don't want theta to outpace delta in most cases. Obviously that could happen. So like 222.5s right now, for example, the theta is outpacing. Really at 225 it flips. No, excuse me. It flips at 220. Again, that makes sense because it's in the money. So, but why get in now? It hasn't actually reversed yet. Well, we're going to check that because we're just trying to identify which contracts maybe look appealing before we make a trade, before we jump the gun. And it looks like AMC's come back down. So it's checking now that 350 area we talked about, the 352 area. GME, I haven't talked about GME at all today. So I thought what may occur is that we would pump and drop I actually think I had it here. So it happened a little bit later. But it did drop down. It hit that low pretty far down at 226. So I've been getting that pretty close to right. This is turning up a little bit at this point. So the good news is, if there is good news here, is that it's turned up a little bit. I still think this is the setup, and I really think that the exit is over here. But if it at some point breaks back up, I mean, this is pretty close to what we were expecting. But at some point, this breaks back up and makes a higher high, and we need to pay attention. So it might be good here to have an alert set. It looks like a double flush, boom, then back down. And then we'll see if it holds or if it drops back through again. I wouldn't be surprised either way if it kind of stops here at 27.20 or drops, or if it pushes up again. Doesn't really matter. This was an up thrust followed by weakness with a massive secondary push. Listed sellers dropped it back down to 26.36. I've been saying I think it might come down to 25.90, 25.70. So we'll see. It's taken longer than expected to make this move down. So this definitely could adjust what we see over here in terms of like where it is. So we're not there yet. And if this ends up being the bottom, which is possible, then this ends up pushing above. So we're kind of in the middle zone right now. We're not really sure yet. So yeah, I'm glad that Apple's dropping farther actually. Although I'm not happy at dropping beneath this creek. Let's take a look. Is there another place that this might be finding its rest? Could be there. This is a wave up, wave back down. This one's kind of ugly. There's a really low. So that doesn't interact with us at all where we are presently. But it is a possibility. This is another one. I'm looking at where it made a jump and then advanced. Jump and then advance. Jump, advance. See those like walkouts? Anyways, I should probably finish this thought. So the 230 contract. Oh man. This is for like this week, by the way. So you guys are like, well, that doesn't, I'm not going to buy that. No, probably not. What I'm doing is I'm looking at, would give you the most exposure if you were trading this week. And then I'm going to take that further and see what that did a month from now so that I can see the difference and like the change of those. Again, I don't want to be jumping into something just because of a breakout without having researched anything about it. So I'm still looking at these as if, yeah, this is possible. It hits 230 this week. Do I think it hits 230 this week? I don't know. Maybe. It'd have to be a big turnaround. When you have these high volume sell downs, sometimes you can have some pretty strong reactions. And considering where it is, it's possible if it reverses suddenly that you get like a gap up and run up really far. So even though it's really risky, it may be actually a very good play this week. We'll see. Not like a I'm going to put all my money into it kind of play. You get what I'm saying? All right. So these 230s are losing $16 a day. And you only gain $9 per dollar move. So it has to move pretty far to get you your money back. Pretty far, pretty fast. But my thing was, let's look at these ratios and see if this is where that trend is shifting. So 9 over 16 is 5.6. And then the cost for each of these is important. So then the cost of this is probably changed since I last said it, because this price is moving around a lot. And I'm not updating my chart right now or I'm not updating the options chain with live information. But when I started it, the price was 29 cents and 17 cents respectively. Need to put a 0 there so we know that that's pennies. Yeah, so I think just getting the 230 versus the 232, while there is technically more decay on those 230s from a helicopter standpoint, right? You're looking at the theta decay or whatever. It seems a little unbalanced. But the realistic part of this is that you would look at that price ratio to the price to what you're getting on that ratio. So the 5.6 is not significantly better, right? And the cost is a lot higher. So we can take so this is a 1.7. And we'll just round it up, 1.71 ratio, just going across. And this is 1.12. So those aren't equal, right? So you're paying 1.71 times more, which isn't a lot, but I mean, it's an increase of 70%, right? You're paying 70% more for this contract, but you're only getting 12% more exposure. So really these 232 5s are better if you're doing like a quick, but I mean the problem of course being that you still have to do the math. But I mean in terms of value, I think it's a better value. Because you're getting a similar ratio for less money, for a lot less, like 70% less. You're only getting 10% less on the ratio, but you're paying 70% less. So that's a good value. Does that make sense what I did? Maybe it doesn't. So like, hopefully that makes sense. So the way I'm doing it is I'm just thinking about value. I'm not thinking about necessarily that I'm going to do this for sure, but like what's more valuable. I'm liking that 232.5 because I think it's a better value. You get more bang for your buck. Yeah. So like, this is just one way to do it. You'd still have to make a determination about what needs to happen. So the problem with doing something like that's going to expire this week is you only have how many days? You have today, so that's one. The rest of today, I should say, which is really like a half day now, half of a day. You've got Wednesday, Thursday, Friday. So you have 3.5 days, and you're going to be decaying pretty fast, you know, in that time. So yeah, 3.5 days isn't a lot of time. So in order to outpace it, you'd have to make twice as much. 3.5. That contract will be gone. So they would be really valuable if tomorrow it got like a big pop and you could get out Wednesday. I think as soon as that happens, that's it. It's done. So those 232s are not really good for this week, but we could look at, interestingly, the 31st. The 230s are pretty active. The 232s are not as active. They're identical in implied volatility, which is interesting. Again, I think the ratios are pretty darn similar too. But I would say next week, it looks like you're doing better with, that would be the 31st. If you think it's going to pop, I think next week the ratio delta to theta actually looks better in favor of the 230s. They're really tight, and they actually start flipping the other way at 235. That works against you. So I don't know why anyone would get a theta ratio that's above delta. That bothers me. Why would you do that? It's just getting like eaten up. But I guess that's the risk. All right, now let's look at February. So a week out, I actually think the 230s are better. This week, though I don't think it's a very good idea necessarily. So this is, I think this is slightly better deal for the week ending on the 24th. And I think the next better deal is the one here. These are better for, again, not by much, but they seem to be a little bit better here on the 24th, or not the 24th, but the 31st. Oh, it did change. So now let's look at way out. Let's look at February only, and let's look a month out. We know that by that point, there could be a lot that changes. Earnings is coming up the 30th. So that would be before these. So I think that, let's see. February 21st, huge amount of volume and open interest at 240 again. That's interesting. We talked about that before. And then 230 has quite a bit. And then the ratios there are pretty favorable. It's 3:2 to 1. So that's not bad. That's like 3 to 1, basically. That's much better than what we're getting now. The prices are more expensive. You know, we're talking about, instead of having like contracts that are dirt cheap, we're talking about have contracts at like $3.55. So you're paying for it. You know, you're paying for that better ratio. The cheapest it goes at 240 is $1.40. They're down $2 today. I mean, these contracts have dumped quite a bit, but you're going to pay for it, you know. So if you want the farther out, it's definitely more expensive. A month out, you're going to be paying over $1. The 245s are 90 cents. And it's a 2 to 1 ratio, so it's not bad. So I mean, like, if you really wanted to just get a piece of it and you didn't want to have to pay more than $1 a contract, you could do 245s. But I don't think it would be a very good hold, you know, for very long. So the 245s are sub $1. The 242, 240 are 112 and 140 respectively. So the high amount of volume and open interest on the 240s, that's a 15 to 6 ratio, closer to 16 to 7 ratio. So again, it's over 50%. So the 240s are not bad if you're just looking again for like a bargain, but it's a significant jump going from there to the 242s, 30 cents. Yeah, and then 237, 340. So the 230s are $3.50. They're pretty expensive. But if you're thinking like, hey, it's pretty likely that this is going to be above and get to 228s, which I think is very likely. I think it's going to react and come back up here. If you think that's likely going to happen, then it makes sense that 230 would be really attractive. So farther out, I mean, if you're trying to buy on like a bargain, I don't think you're going to get a lot I don't think you're going to be able to get a lot of contracts because February 21st, which is 30 days out, those 230 strikes are pretty expensive by comparison. They're $3.49 right now. They dropped $4 today, so they're over half off what they were yesterday. So they're really low. That's crazy. That dropped over 50% today. That's a huge change. All right, I'm going to use an options calculator. I don't really like them, but because I think it's hard for you to judge. It's always really hard for me anyways to judge. I would say you, but I'm just really talking about me. It's hard for me to judge the change in volatility and what that would actually mean. So I'm going to look at those February 21st ones. I'm going to just check out the 230 strike. It's actually 348 middle, 350 at the ask. Let's just do 348. We'll just skip the difference. So if you bought 3 of those contracts, that's $1,000. And let's say it can get up at least to 228, and we'll go up to 240. So assuming it makes that rebound and goes for that gap with 0 change in implied volatility from here up, if it makes that before the 30th of January, so I'm going to look at January 30th isn't listed. It's Thursday. So let's say it gets there by the 29th and it hits 228 on the 29th, 229 on the 29th. We'll just go to the middle. Let's say it hits 229 on the 29th. None of this is guaranteed, but if it hit 229 on the 29th, which is a weird number, by the 29th, right? Then it's without any change in volatility at all, if it can make that move, it's a 75% gain. That's a $700 gain on $1,000. So, well, $7,900, but it's a 75.9% move, which, you know, these kind of things, it's like, I don't really know. It's about 80%. But I feel like that can change pretty dramatically because volatility could be crushed. You know what I mean? There could be a number of things that happen that actually make it negative. You know, you could lose volatility over that time. If you lose like 50%, which is a lot, but if you lose like 50% volatility, your contracts don't look nearly as attractive. I mean, if you lose about 50% volatility, these are actually negative at 229. Not by a lot. They're like down 10%. So you're taking a pretty big risk. And then so if they lose up to 50% volatility, which is, you know, again, it depends on what you think is going to happen, then yeah, these could drop significantly. And I think it's possible that that happens if it chops here and then pops. You might lose some volatility early on, depending on how they manufacture these moves. So even if you think that you're brilliant and it's going to make 80%, that's with no change, right? It's very, very quick to lose money if the volatility decreases. And we could go to the 0 point. I said negative 50, but let's see. Let's try like, I don't know. I probably could figure out the number pretty easily, but I'm not going to do it. So it's a decent chance of profit. It's not like a huge chance. 229. So that's still positive. So 30% loss, you'd still have positive gains. So let's try 40% loss in IV. Yes, so right around 40% loss in IV, and you basically have like a zero gain. So, now what that means is it doesn't mean that it loses 40%, like you don't add that number, it's a multiple. So like for right now, if you're looking at the options chain, you're like, hey man, I kind of like those contracts that you're looking at, you know, I want to maybe get this, the example that we're using right now is like 3 contracts for the 230 strike, right? So I didn't write the 230 strike on here, but I need to write that. So 230 February 21st, okay? And when you look at it that way, it gives you a sense of understanding like the math behind maybe what's going on. But the thing is like the volatility on those, if I go back and I look at the 230, the implied volatility right now is 27.64%. Okay. So like, this is where you're going to have like a risk ratio, I suppose. So 26, wait, what was it? 27.64%. So what this doesn't mean is that you subtract 40%. That would be incorrect. It would be like you're losing 40%. So if the IV drops to I need my calculator. So if you take 27.64 and you multiply it by 0.6, that's going to be a 40% decrease. So if the IV drops to 16.58 on these, that's what that would mean. So if it goes below 16.58%, you're basically not looking good for your target. You could still make money, but it wouldn't be before here. You know, it'd have to be some kind of a bigger, either a bigger rise, but this like deadlines, which is time and price, would not work for you. So it would be something that it would be ever changing, but no change in IV. Obviously, you're going to make tons of money if it hits that place before then. And an increase in IV also would do the same thing. So if it drops to 16.58% implied volatility on these contracts, even if you hit, you might be in the money. You might hit 230 on the 24th or something, or, you know, or whatever, the 27th of January. You might hit that, but it's not necessarily going to be profitable. Does that make sense? So I know the math might get a little confusing, but like that's the way I would look at it. So this is a good trade, but you'd have to watch it and make sure that the implied volatility on your contract doesn't sink low. So we're doing a lot of research here, more than I maybe normally would. But I think it's because we have time, so I'm trying to wait and get a good entry. I think it's a really potentially strong play. Like I think there's a decent chance this is going to happen. And if I can take $1,000 and make $1,000 from $1,000, and that's a good trade, right? That's what you want. It doesn't have to be that much. It was just an example. But that's a good trade, right? So if you think that can happen within a week, that's pretty decent. 100% return almost. So right now, I think what I would probably do is watch carefully and see, and it already looks like this is kind of come out and met that end. So I think it's pretty likely this is going to come out, and let me see if this has done a 1, 2, 3 and then worked its way out. 1, 2, 3, 4, 5. This one debatably is a 1, 2, 3, 4, 5, but it chopped first, just like this did, then dropped and did a 1, 2, 3. So we may see, maybe. So I think what probably happens here is that we're going to see this short term come back up. I'm not positive. I don't know why I put 223 on the chart. Yeah, I don't really know why I did that. I can't remember. That doesn't help anybody. Well, regardless, we may still see this come down one more, or try to come down like one more time. There's plenty of space before this like actually takes off. So if you were trading it now, you would be doing basically like a minuscule kind of move, thinking that, yeah, maybe it goes pretty quick. I think by the end of the day today, I might have a good answer of what might happen. If it comes above here, it might get a good push. All right, guys, I'm liking this. I'm gonna take a quick break. I need to use the facilities. I'm liking Wolf again. I talked about this. I'm liking this as a possible buy-in here, but we just haven't gotten there yet. Really enjoying MPW going up. It's a nice feeling. I'm making money on that for now. Still thinking it could go all the way up to like to 450, but if I'm being like really judicious and saying like I don't think it's necessarily going to go very far, it's already approaching that wave. So you might have reason to suspect this doesn't go farther. I think it's probable that it goes to, and I've been talking about it a lot, I really think it's strong probability it goes up to like the 480s before kind of crapping out. And I think a lot of that's this wave rotation, but I genuinely think it just needs to get up there again. It's been a minute, and it's been building out long term, this 4 hour divert. I mean, it's just really long term build out. It's just ready to go. I don't know. I bought in. It's a bit of a double bottom here, and that's a weaker bullish divergence, but I bought in at back here around 4, just shares only, and I'm going to watch it and see what happens, but I want to say I think it's going to try, it might have a pullback in the middle, but I think it's going to go up to like 480, 490 again. It needs to come back up here. It just doesn't make any sense that it hasn't already. So this is absolutely like breaking out, in my opinion. It's there. AMC, you know, there's not really much to say. We said we were thinking it might check. I'm not going to go forever. I just need to take a quick restroom break, but I just want you guys to know what I'm doing. But I said it needs to come back down and check this level. It did not hold, so it kind of bled right back down through, and now it's holding at 352, and that was the creek level that I said if it doesn't hold that, you're looking at probably coming back to 350. There's a little gap on the 6-minute. And I think after that point, it's coming down low if it continues to drop through 350. So it's not there yet. Right now, all it's done is kind of done an M cross, 1, 2. It could still hold and advance. That's what this is supposed to represent. I've got it going really fast. And my thought is that this is probably going to be most of the day. This looks good. This looks promising. This jump here, it's a little early. See how it's like coming across earlier and like building back out already? So this is a promising situation. I'm just a little nervous that if it doesn't hold, it's going to come down pretty low. So back to the floor at just under 350. So again, we're not there yet. IWM cruising up to near 230s. That's about as expected. It's going to approach that outer creek finally, and then we'll see. Could be a massive move, you know, but it's on the horizon still. It's not quite there yet. Almost. And you guys know I've already been talking a lot about Apple, but I'll be right back. I'm just going to take a quick breather, get some coffee, use the facilities. All right, guys. So today's been a bit of a interesting one. And I've spent some time talking about AMC, some time talking about GME, not a lot. My expectations aren't really changed, and I think that's a big part of the reason why I'm not spending a huge amount of time on them. My concern was just when this was rallying that folks were getting way too over leveraged, over bullish in terms of upside. I don't have anything else to say. Like, it definitely was very likely this was going to take at least a breather. I don't necessarily think it's going to continue to drop really far, but if it does lose 345 or thereabouts, then okay, then potentially in like a bad situation. Until that happens, we're just kind of waiting to see if it builds out support. If it holds support here at 352 and it comes back above 359, that's really where the next trade would be. Like, that's where you could potentially see this come back out, but it hasn't even broken out of this outer trend yet, which I said repeatedly last week that I didn't feel like this was a wise YOLO anyways, or whatever, because the nature of this is just uncertain until you cross up and over. Now, is it at a place where it could potentially see that? Sure. You can see that wave down. The wave back up here is very quick. The risk here is similar to what happened maybe here, right? This is a similar situation where you have like a nice little creek that comes down and approaches an outer portion and it fails to advance. That's the biggest risk anyways in this particular situation. So like, I'm also noticing my stream is like janky today and I don't really know why. It's probably because I'm using all this other stuff with the options chain or whatever. But like, that is a risk that could potentially happen. And that would be right here. If it comes up and it head fakes or it just can't find the buyers, then it's not bullish. To come up here and reject and start making lows again is going to be bad. Like, it's probably going to be not a complete and total capitulation, but at least short term, I would say, yeah, it's leaving this range up here in the 350s behind. We knew that when it came up here, it was likely going to be traded, like down in the 350s. I said this for a long time. Even though it didn't get here the way that we wanted it to, or that I wanted it to, or I saw it coming down, knew this was going to be a traded zone at some point. It's being traded now, so there's a decent amount of volume pickup. Yeah, you just can't put the cart before the horse. That's all. If you assume this was going to break out and rally forever, you could be right. It could do that. And again, I think there's support for it to say that, yeah, I think it could go up further. I'm pretty sure this is going to head up to near 450s regardless of what happens after that. But I don't necessarily know that it's going to happen right here. If the market takes a turn back down for whatever reason, it comes below 345 and this thing comes down to 320s again, we could be weeks out from any kind of recovery. And that just puts it into mind that like everything can take a lot longer than expected. There's a lot of space down here if it drops low. So there's no telling. What about everything else? What about that mid-February intersection? Well, what about it? I mean, we've had so many different call-outs on my part for these trajectories that it doesn't really make sense that every one of them at this point should be given equal weight. I think some of them have been pretty darn close to moments of interest. Like, this was one that really surprised me, this December 5th and 6th, because there were some really strong suggested trajectories at that point. But the weakness that's shown here is just completely the opposite of where those trajectories were actually headed. There was no follow through. So it was timed right, but then other times that's been almost exactly the opposite. It's like that trajectory becomes almost like a center pivot for the wave low. So it's hard for me to look at this and be like, yeah, it's definitely going to come up by the end of February to $20. I mean, maybe, but the way this has worked out, and we knew this a while ago, by the way, because we had when we originally did this widening, I was saying that I thought it looked more like a June run up. That initially that there was a possibility that this doesn't go anywhere in January, and that you get a potentially like a June run up, right? And it wasn't until very, very recently that I started talking again about maybe January building out, breaking out going into February. Late January is what it was looking like, because it would have had to be after the 16th or the 17th, more than likely. So all of that being said, like Though there is certainly a possibility that this happens here in this place and time, and I wouldn't put it past the market to do something crazy like this, especially with the operators on AMC being what they are. We haven't yet filled that gap down low. We're hovering right above it. You know, anybody that said this had to be a breakaway, we were never going to come back. Unfortunately, you have to eat your words, you know. And I've said it could be, but I think that historically AMC's not really shied away from these gap fills lately, and it's largely been still very bearish. You know, we're working against a storm of bears that are trying to constantly hold this price down. And I think that's genuinely true. But at the same time, the operators that are invested in this, that do maybe want to see it go up, they don't really care about the time, I think, as much as some of us do, because they're not really heavily invested in options until it matters. So usually, to some degree, there's I don't know, maybe more of like a straddle strategy. I do see that the options had a lot of mixed bag between puts and calls, but largely it's just share positions anyways. So you can sit on a share position indefinitely. And most of these operators are only trading 3 to 5 year out plans. So you think about that, it's like, yeah, I mean, it's possible that this is going to rally here. It's also very possible that even if it did come up, that this might not be finished. You could see that downside continue. And frankly, I don't know how many times I've said 226, but it's certainly not impossible. So you can see whatever you want to see here, but the better method for this is just to wait. And I think there's a good trade to be had from right around this like 380 mark all the way up to about 430. I think that's a good trade, and I think that's the next trade. So the trajectory out does lend itself to a slingshot here if we kind of work our way back out. You know, we might see it before too long. It could be this week or at latest maybe early next week even, just based on these trajectories. This goes out to January 24th way up here at like 4.5. So I mean, it's very possible that this, even if it went down low, it could come right back up in like a wave 3 or something and hit the top trajectory zone, even though, yeah, it's not in the timing you originally thought. It lost that trajectory, but it's recoverable, right? So when I look at these kinds of things, I don't think there's any real strong doubt in my mind that it could go from 340 all the way up to $4. Like a 50-cent move this week is totally possible. And that's a good trade. Like that's a 20% move. It's not a billion percent. It's not, a game-altering move, but it is a good move, and it's a breakout move. So it's a move that requires you jump this creek, and then you could potentially advance. So I don't see any problem with watching it. If you want to watch it and be like hounding on it to see if you can catch a bottom, fine. But at this point, I'm like, well, it's still in this region where it could hold. If it holds around 352, which is where we are now, you might just see it kind of come right up above 360. But even then, it's like you really got to wait until it comes over about 365. So for me, I'm like going to put an alert at 367. I think that's probable that this is where that interaction happens, and I don't think it happens before then. So no, I have not LSX. I'm not the best with that kind of stuff. So I don't do things that I'm not comfortable doing. I'm getting better at trading options, for example. But like in terms of, swap data, things like that, that's not my expertise at all. You could show me that stuff and I wouldn't be able to see my head from my toes kind of thing. It's like, as much as I know that that's important, there's still a lot of areas in the market that I haven't really learned, used to pay a lot more attention to like futures contracts, expirations, and things like that. And those are important. And that may have to do with swap data. But for now, like that's just not my area of expertise. I think you're better served going somewhere else to try to find that information. So, is there something you want to share about it? Is that why you brought it up? Because I'm happy to entertain that, you know, if you just want to talk about what you want to share about it. Yeah, this is again, we were talking about, so some Goblin asked about WTO. So I mentioned last week that this looked a little like a weakness to me. It didn't look great. And then it came in up thrust, and that's just not positive. So like there was a lot of danger in this kind of walking back through, and you can see that it did. So I hate to be the bearer of bad news here, but this is just kind of doing what was expected, unfortunately, after seeing that weakness last week. So I didn't draw it out or anything, but you would have expected an up thrust. It dropped down, and then it just pops up and just barely hits that mark. I mean, it's right on the money there. So it's walked its way through that trend. Now, that doesn't mean that it can't break out. It doesn't mean that it couldn't even possibly be bullish. You know, you can see the way that this kind of jumped over might lend itself to a reversal, but as of right now, to me it was like, oh, well, it probably heads down towards, you know, 28 again. If it manages to hold right where it's at, okay, which is I think the middle of this major channel, then it could be thought of as a kind of 50% type retracement. And that's where we start looking at, well, what's the actual fib levels right here? And you can see that the 786 right there was hit on this dip down. Somebody wants that 786, or they see it as kind of a natural place to go. So the 786 to 854 is 27 and 28. The 618, which is where it's struggling right now, really intersects all the levels that we thought it was going to get to right here. We thought this would be the pocket around 30 cents. So it's already in the right spot. So yeah, beyond that, it's kind of like, what are you going to do? You know, you just wait. There's not much to do. So this hasn't tested, yeah, this hasn't tested the, I'm not sure what that is. This is old news. I'm going to get rid of this. So it's very possible that right here it's forming out a bit of a bottom. I see a lot of upturn. I'm a little nervous that if it breaks down again, it's kind of in the, where is it going to go? Well, the natural place would be right back down to the floor at like 20 cents. So there's certainly a risk there of coming back down to near 20 cents. And I think that's important to just take account of like, oh, you know, this dumps, it's likely going to come down to like 20 cents. So we want to keep that in our mind as a possibility. But in order for this to advance, it's exactly where I have this yellow marker anyways. I know I've got it looking kind of bearish after that, but it would have to come back above here. It's going to be right at the intersection of both this top and this creek jump and, you know, this this parallel and this moving average. I mean, there's just a lot going on in that pocket. So for now, I'd say that you have a decent chance of support down there at like 28 cents. But if it holds a higher high and then breaks out, I think that's also possibly a really good entry point, because if this holds a higher high here, and it would have to, right? It can't, there's no option, it's not an optional thing, right? It has to be obviously a higher high. So if this holds a higher high and then breaks out this way, right here at 31 cents, there's a chance that that's a risk on entry as well. And this is kind of where we talked about the risk on entry down here at 30 cents. This would be that risk on entry right here if it managed to get above here and come back up. Because then you could watch it and you'd have to wait and see, but it'd have to get above here, and then it would advance. Potentially, this is what you'd have to look forward to, because you'd have some kind of a consolidation here instead of what I'm showing you, and then it would break above and then go. And that's where things start really changing for this. If it's going to change for it, that would be where it would change. But this is all kind of the same. This really isn't any different. It still would have to do the same thing and come back up. And then this would just be like a fib retracement. You know, I think that for something like WTO, it's a tough one. We know on the bigger picture, it's had some flubs here and there to kind of make those advancements, but it's maintained some of the strength that you might want. The problem that I find is that a lot of this stuff, it's like, I don't know, man. Like, these are overseas, stocks that are obviously very different, from something that's trading in like a first world, quote unquote, market. And so there could be some challenges in that. I still think this looks pretty solid for a potential exit up here. It looks about right. So yeah, I don't think that looks bad at all. And then this guy, this is way up here. To me, it looks like this would be the more likely exit right there at like 65 cents. Maybe here, here. So yeah, again, I think there's a high risk right now to where this is. But I can definitely see why pushing up above here and then breaking out would be really strong. So I still think this is probably the right way to look at it, though. I don't know if we go straight up, but it could be pretty big. Not a bad trade if you can catch this low and if it does what we think it might do. But this is a penny stock. You see that? Are you talking about WTO, Jason? I mean, frankly, if you look at this from like a helicopter perspective, right? If this is a head and shoulder and it goes all the way down, it's going to go pretty low. It's probably going to go like 20 cents. And it's already tested twice the top here at 42. So when I look at this, I'm like, it's really got to hold like right here. If this doesn't hold, I'm not sure if I could reasonably expect anything except for some pretty major downside. Yeah, that's what I figured. It didn't look like it had to be done. So there's a widening going on, but if it shakes out again, we'll see. I'll have to see. This could just be one of those things that, again, it's bound for like zero, This is the only way out, and I'm being very like, what's the word? not pessimistic, but I'm being very realistic when I say that it probably isn't going to take this much time. I'm making it sound like it's going to come right up here at this time, but those are just triangulations. It doesn't really matter. It could take longer to come up. It makes no real difference. But if it's going to work its way back out and have like a bit of a squeeze, it really needs to be here, because where it's standing right now, it's just on the precipice of death. I really don't want it, but it's not all bad. It's just that this made an advancement that could be seen as distributive. It did technically jump up over this creek, and it's holding it right now. That's why it cannot come back down beneath that creek. Like, if this comes down beneath this creek and significantly breaks through like 27, I would be extremely bearish short term. I would think that this is probably going to drop all the way to 20. So just be careful, because this would be like a fake advancement, essentially. So what, are you going to get an apple or what? Nothing to say yet. Yeah, so this makes sense. Kind of like we were saying, it would probably chop. There were some stronger trends that existed back here. And this is the one that I thought was more likely going to be like a stronger trend in the future, right? So at this point in time, it's hitting that trend right now. So RIME is not necessarily a perfect stock by any means. I think it's a really risky trade. But if you're just looking for that dead cat bounce, then yeah, again, I still think it's better to wait until 4-5, but this is sensible. The local creek was jumped back here, but it wasn't retested, so it's really low. This is a low position for this SOW. So maybe at that place right now where it's getting ready to try to turn back up a little bit. I don't know, man. I just don't know how to trade this. Like, it's a penny stock. It's going to have pretty big reactions at some point back to the upside, but if it happens now, it might go up to like 4.38 instead of 3.3. But I think it's possible this could come all the way back down, or this could be at 3.1 before it goes anywhere. Like, this could just be like a little local hook, and then it comes back down. You know, it's just too soon. I don't think it's there yet. This doesn't look like it's broken out yet. I don't think it's broken out till significantly higher for what it's worth, like up here around 4.5. Then I'd be like, yeah, it's probably going to go. There's too much that could happen between now and then. Yeah, AMC looking a little bit so-so. It's really just coming back to fill this little micro gap. There's a small gap on like the 6-minute chart this morning that I noticed. I don't know. It doesn't mean it's over. You can see a head and shoulder forming out. So if it breaks through that neckline around 345, I think it's bad. Yeah, no worries. I'm just looking at it. So yeah, this is a risky spot for WTO. I mean, if I had to make a guess, just looking at the 4-hour, I'd say it's coming down. If I'm trying to be as honest and straightforward as possible, right? And like just kind of see it as I normally see things. It just looks like it already did the up thrust here after making a low. It came down and it hooked up. So this has to have some kind of a major reversal on WTO to really sustain a move. And I think the importance of all this is just to understand like what a walk down looks like and like what's going on with this volume. You know, there's parts of this that should be fairly straightforward to understand. Like when this took off, the high volume comes off of this floor at 33 cents. When it comes back down, that's right where it ends up walking underneath, right? And then it's already tested it. It did make a higher high, but it's backing up. So at this point, in order for this to confirm that it's going to continue back up, it has got to make that reversal. Is that something that never happens? Are you just making something up? No. Like, this is essentially what happened in AMC when we did that long-winded video on the 2022 bottom. Like, it came back down to like a middle creek, real low, right? A big retracement. It pushes out, it makes a higher high, and then during the breakdown, it makes a higher low. And that's really where I said, oh, it's pretty bullish, you know. And until that point, I wasn't like overtly that bullish on it. I was kind of like, maybe, you know, and then it becomes, yeah, it's going to go, right? But there's a lot of things that are happening right now that are clearly more bearish. And that's what I'm trying to get across is like, yeah, this makes a higher low here and it advances back over 31 cent, 32 cent. I think it's a risk on entry because you've seen it make a higher high and then it's made a higher low. Now it's ready to just kind of start walking back out, potentially. You know, potentially that's what happens. And I think that's not a bad... I don't think that's a bad estimation of this potential here. Yeah, it'd probably be right around here, actually, pretty early. And it's certainly possible, but you got to see those walkouts first. And if that doesn't happen, then the only other alternative here is bear side, in my opinion, because of the way this already pushed up and then rejected. So if it starts bleeding through the bottom, that's what I was saying. I think it's kind of bearish. So that's it for WTO. This really hasn't changed in terms of upside for me. Like, this is still the same areas we've been talking about. I just had it over here, but it's the same concept. Downside is the only thing that's really changed in terms of like what we need to watch out for. So yeah, I don't know, man. There's not really anything very reliable on this Rime chart to go off of as an indicator to buy. I'm just not seeing it. AMD is still moving up pretty strong. It's holding anyways. I wouldn't say it's moving up just yet, but it's holding at 122. I'd already exited that play this morning, like first thing. I kind of jumped the gun. I missed out on about 40%. I got like 7% or something on that trade because I played the gap, unfortunately, and I was like, this stopped out really quick this morning. My idea was that if it held above 225, we'd probably see it move up to 231 IWM. So I think potential is still there to head up a little further and get that push up to 230s at least. Then I think we're going to maybe chop for a bit, and we'll see. Long term, I don't really know just yet if it's ready to go unless it breaks out of this creek here at like 232 basically. And I think we could see a pretty massive rally on IWM. So I haven't really mentioned that this morning, but that was something I was looking at first thing. Feng is one that I haven't talked about very much. It's a oil rig, and Looks like MPW is still kind of cruising up here. It's at 6% up. It's at 437. So it's pushing as far as it can. FANG is one that long term I think has some seriously strong potential for a move up to near 212. When we first talked about this, it was probably early January, and I was talking about how I wanted to pick out stocks that I find to be pretty easy to trade. FANG is like a slow motion stock, which I really like. It's not one that you want to like get in and expect to make huge gains overnight. It's very methodical. Like there's almost never like a day-to-day move here that's like super dramatic. Every now and then you get one, but it's actually fairly slow, which I kind of like. It reminds me a little bit of like BB, BlackBerry. Like people look at that a lot. That's like a really slow chart. It just doesn't move fast. So I think what we're waiting for on this is to see if it reacts and holds above. So I see this as a potential buy if it can hold above this floor, right? That's been established here. And so as long as it holds above that floor, I think it's a potential buy-in. And there is a strong potential at that point that you could go up to nearly 300%. I won't delay and talk about this forever. It needs to obviously cool off. There's some other problems here if you look at the M cross kind of bit. But the wave itself is fairly straightforward to me. So this wave comes up and down and over, and then it would return back to the upside. It doesn't necessarily have to be in that time, but if it did, it would be around April 10th. So maybe more like over here. I've got this really fast, but it would be like there. So this earnings may end up being a place where we see it pivot. I'm feeling like there's a good chance this happens, but you know, it is what it is. So it's not a buy-in yet. I'll definitely want to keep an eye on it getting closer to mid-February. I like it though, it's slow. So if you feel like you're always missing trades, this is one that's easy. Just put it on your watch list and just wait. Because it doesn't move like, in my opinion, it doesn't move really fast. So it's easy to watch it trade. It's very rarely moving more than 1% or 2% per day, which is kind of nice. So it is almost like watching a stock in slow motion. Yeah. But I like that. I mean, I like it. I think that's a good thing. Yeah, so there's one problem, which is that right around earnings, you've got a trajectory that intersects the middle. It almost makes it look like it would be on the upside. But I think there's definitely a possibility based on this wave out that we don't actually see that until after earnings. And then we've really got to find that support, I think, on 169. There's all kinds of little gaps and junk on this chart. I wouldn't overthink the gaps. They're there. You know, maybe 164 could happen if this drops low. It is what it is. I'm waiting it out. So that's all I want to say about that. It's not a right now kind of trade. If I were going to trade it right now, I'd be trading like leaps more than likely and nothing else. So yeah. And Apple's trying, but if I get into Apple today, I'll probably be averaging in. I'll post my trades in the Discord group if you want to see what I'm doing. But I'd probably be averaging in here. And again, this is not a long-term trade, okay? This is like a trade that I think is like, hey, we're going to break out and head to 230s. That's about it. And that's based on indicators being way overdone, some decent divergence on like MFI and MACD. Beyond that, I don't necessarily think Apple's going to go to the moon. I think it's very strong potential here for a continuation of bottoming going into, I mean, it could be at a bottom, I guess, technically, because it is a floor. We'll see. But I think there's a possibility it bottoms near 200. So I'm not there yet. I'm not convinced. I'm just saying that it's going to rally and go back up. But I think we're in for a nice bounce. So that's my anticipation here. So I'll let you know if I enter a position. If I do it, it'd probably be around noon today. I usually try to make sure I set some time if I'm going to do it. But I kind of feel like IWM was my first big trade here of the year. I got about 100% off that. You know, I got a little bit off of AMD, but I kind of missed it this morning. Got a little bit off of NU before that came back down. Unfortunately, NU kind of pittered out. Just came right back down to 11.5. So I was glad I got out with profit, but I had already set like a alert. So I don't really feel like we kind of hit where we're expecting to hit, because originally we had talked about 1170 as the likely target from down here around 11, that it would come back up to about 1170 and then potentially go for the gap at like 1190, maybe go for 12 something. But if you look at the outer trends, it actually already hit it. So it hit that trend. So it's there. Like, it made it to the edge that we thought it was going to make it to. So the lack of continuity here wouldn't surprise me. If it just kind of stopped and then started coming back down, and that's that, then that's that. I don't like that. If you feel like I left you hanging on it, there's not much I can do. It was an early morning trade. If it holds 1150s, and it's not looking like it's holding it, but if it holds 1150s, it's possible it gets another rally. But we were right. Tuesday seems to be the high right now. It did come up and meet this marker here. I don't know, man. I kind of feel like it could go again just based on like certain things, but I think the main trade is kind of done. Like, this was the trade, was from this bottom here at December 31st up. And we may see it go again, up to about 12.15. But if it does do that, it's got to be like some kind of a, build back out or something like that, off to the side here. Because I think this ship is kind of sailed. And that would be it. That's like a channel. That's a channel bound setup. So if it doesn't go and it breaks down, at this point, I think it's going to go back real low. I think it's going to head back to 8.5s. This is kind of like an LSPY. If you were shares only, then you may have gained like 50% or so from where we entered, or 50 cents from where we entered. It's not a great trade. Like I mentioned, when we started seeing it kind of do these deep retracements, it just kept making weakness after weakness. Every time it pulled back, it would have a little pop and then go lower. It would pull back and have a little pop and then it would go lower. And those are just showing like there's just a sort of a weakness in the buying. And it's a very low volume chop to the upside. You got a high volume push today. The whole thing to me just looks like it's kind of done, You can see the intersection here. It's right along the intersection of that creek down. So again, maybe it gets a secondary move. Like, that's a big maybe. But if it does, I would not count it as strong. I would just call it like an upthrust or something. So if it manages to do something like that, cool. I would be most surprised if it broke out and just kept going. I've been thinking coming up to something like 1270s would be really shocking to me for this. I would just be genuinely surprised if it came above and broke out, just based on the way the setup is right now. So, yeah. So at the time present, my greater feeling is that this is pretty much done. And we're going to start looking at more downside for NU. more than likely, that's what we see. So first step would be coming back through 11.15. So if at some point in the near future it drops like 11.15, each one of these would be like a level of stair stepping. Not as saying it's going to happen like just like that, but that would be essentially like what you would look for. And then I think at that point it goes pretty low. This is where I think we start talking about maybe some sideways and then dropping down to 8.5s. So we'll see. I mean, this is a ways off if it does happen, so we'll have time. I doubt it would be like an overnight drop or something like that. Probably have a couple big sell-offs, but we'll more than likely be able to see it happen when it happens. And then Wolf I like. I don't see a lot of strength right here. This just looks like a bounce to me. Like nothing else just yet. I definitely see it jump the local creek, like the most local one you could possibly have. But I think that this is pretty typical of a stock in the market, is to have that early auto reaction and then see what happens, right? And see if there's a buy-in. So at this point, yeah, like did that local creek drop happen? Sure, but then what? Well, nothing, right? Nothing yet. There's no reaction to the reaction. So cause and effect, right? So like what happened after? Well, the 30-minute is just going back and testing that EMA. That happens to be at 6.5, which is 650 is the previous bottom over here. So it's right now it's rejecting off of a previous support. It tried to push above it. It did not hold it. Now it's rejecting off of it as if it's supply again. And this is where that gap level was in November. Seems like a pretty critical zone. Like if you're beneath this and sellers are selling, you could be in a bad position. Now, that being said, is this bearish or bullish? This is very bullish. This is still like a super bullish setup because on the whole, the big picture, like there's still some pretty massive divergence that we saw on these bottoms, and we've got a heavy amount of selling and buying right here. I'm just concerned that it's not quite done yet, and we have a earnings around the corner, so it's gonna be tricky, Like I'd love for this to already be ready to go by that earnings, be easy to see, but for now it's just okay. When is it gonna kind of build out and break out? I don't know. We're not there yet. This would have widened out, so yeah, I would suggest at this point that between those motions, this creek to this creek, you have a lot of space to like define what happens. So we'll see today, but I'm not gonna, I don't think it's there yet. I think it needs to show some strength and kind of like walk back out. It's probably going to look pretty close to what I've drawn out if it is strong. And that's assuming that it runs up before earnings or into earnings, not after. So like right before or right on it, it's running up. This could happen. I don't really need that. It's kind of redundant. It's the same thing. And conversely, I think walking down would probably look pretty similar at first, because you would have some kind of a movement that would look like an M, but you would go low. And again, I don't really know exactly what that looks like yet, but something like this. You'd have to see it walk through. Maybe it fails to cross this really bizarre, it's like 2 wicks, but I think it is a channel, or I think it is a creek, even if it's just like the 2 wicks on that. at top. You'd be like, that's crazy, man. Let me try that again. Yeah. Yeah, 4 hours still trending up. It's trying to hold. I mean, there's nothing wrong with the 4 hour. It's above its moving averages and stuff. Again, this would be support of a retest on the 4 hour, like that it would build out and then break back out. So again, shares only position, probably a pretty decent, easy to trade. I haven't looked at the options chain on Wolf, but let's just see what it is before what day of the week is this? Wednesday, the 29th. So let's check the 31st and then like the 7th. Let's just see what this move is. So we're thinking maybe it pops, wraps around here. Actually, if it did do that, it would probably be like a 50-50. It's looking pretty good. So anyways, $10 seems kind of likely if it's going to go. Got a lot in the money at 6.5, like right there at 6.57. Very little up there at 10. There's a lot of open interest, but it's like 13 cents. It's a 13-to-2 ratio, 210% volatility. I mean, it's huge. For February, there's a higher open interest around 8. And then there's a decent amount at 10 in February as well. So it's just a little further out. It's 19 cents a contract. Yeah, so pretty risky, but I mean, you could probably get in with a smaller position if you think it's going to go to near 10. Even if it didn't get there, you could get out at 8 or something, you know, on volatility when the volatility's hiked up. And down today, they're red today, those 10s, but you might be able to get a good deal. Spread's pretty good. It's 13 to 14 cents. 13 to 2's decent. You get more bang for your buck, I think, going a little closer to like 8s and 9s. And then you do all the way up at 10. But you get more volatility exposure at 10, so... So the 9 is pretty attractive. I think that's a good one. It's 23 cents a contract. But that's for like the 31st, so that's really short term. Yeah, 31 cents there, 23 cents there. Not as attractive maybe on the 7th. But I actually think $9 strike is pretty good for either the 31st or the 7th. So I had an 8 right here for the 7th. The volume never picked up. There's a lot of open interest on those 8s still, but it never picked up. So that farther out one might still work, but I think 9 is better now. And this January 31 is like kind of like really short term. So you got to be careful. February 7th is short term too, for whatever that's worth. These are both really short-term plays. So for the 9, you're really better off waiting. The February 7th, you could probably get in and just hold it for a bit. You probably wouldn't be too bad. But those 9s are going to get destroyed if this thing chops sideways till the 23rd or something. They're going to be really exposed to just sideways action here. So again, I don't really see much of a trade here until, you know, if and when this does break out. It's a little ways off. But, you know, maybe you could trade if you really wanted to get in. I guess if you felt like it was there, ready to go. And I'm not saying I do, but if you felt that way, you probably could trade it from here up to 7.5 or 7.5, and then that could be like an exit zone potentially, and then you could trade again. 4-hour trend is crossing. I don't know which one it is now. Who knows? As I where is that alert? Oh, that's like here. Yeah. Yeah. So I think Wolf is a decent trade. I think there's a good chance that it's turning around. You know, we've talked about this. But a reaction has to then be met by a breakout. So this is very good for Wolf as a divergence here. Then it has to be met with that breakout. You know? Otherwise, you're really just trading what seems to be like the second half of this leg. In which case, you might as well wait for it to kind of come above the top. Or at least show that it's not going to make lows again. Yeah. I think if it comes back above like 6.5, I'll probably pay attention to it again. Like, and really consider investing. Like a early risk on kind of trade here. If this comes back above and holds. Until then, I'm just seeing like a fall with a bounce. I don't really see anything else just yet. So I don't want to jump the gun on something. And yeah, 6.5 to 7.2, that's what I'm saying. That's a good trade if you can get that. But it's just not there yet. Like, it's got to make that move. And for all we know right now, this is still kind of positioned down on shorter terms. This could still come lower quite a bit. 1 hour still got a lot of legroom down. Weirdly, you get really short term, like 30 minutes down to 15 minutes. It's starting to look more appealing. Like, it doesn't have, I don't know, it has like some early signs of life. Like, it might be getting ready to turn back up, but I think that's going to give way to the greater time frame, especially this 30-minute, this EMA right here being right at 6.5. It's just very, like, very, very telling. Yeah, just chill. There's too much that could happen. Just chill on it, man. Well, that's what I'm doing. Look at AMD, man. Look at it just go. What a dummy, Booksy. You had it, dude. You had like a gold position. Gold. That would have been enough to fill your belly for the week. You just let it go. Jeez Louise. I mean, in theory, and in a lot of ways, I guess this could just be getting started. It did come back above here, so it's probably going to go for the gap. I mean, I don't know why not. Go to like 127. It may even go all the way up to like 135. I just didn't feel as confident this morning when I saw that gap, and then it just started bleeding out. I had to stop in there, and this volume being as it is has been dropping. Now it's above that support, and it seems like it's holding. So it really looks quite good. It looks like it's following through nicely. But anywho, the first stop here isn't way up here at 135. It's right above us at 125. So I think there's going to still be some... that's why I don't think it's a good trade right this second. It's kind of like got another $2 here, and then it might be stopping. So I'll check it again if it comes up above here and see what happens. But I'm thinking it's probably going to reject, take a breather, and then it might break later back up. I would be really surprised if it just kept going. So maybe like over here, come back to the upside. This was like an imaginary line. This doesn't mean anything. Yeah, this trajectory seems to suggest it wouldn't hit until like February perhaps. Like it's aiming for 135 around earnings. Gosh, man, what a dummy, dude. Can't believe I did that. I was so patient. I was so patient. You know, I waited like a week just sitting there on a slightly red position. And as soon as it turned green, I like just did not let it run. That's one of the things that gets you when you're trading is like taking profits too soon. You got to know the difference. I mean, it paid off on NU because I took profits on NU when I could and then got out. You know, I'm done. And I came back down. But then you look at something like this and you're like, holy cow, man. I had that in the bag. Like I had that 122 strike. They're probably up like 80-90% now, I'm sure. They were up like 30% after that gap filled and then pushed back up. So maybe not that high, but you know, that's just an incredibly silly thing to chicken out of. I should have set the stop lower. I had it like here, so it went up, went down, it stopped. I got profit, it just stinks. Lesson learned. Ah! Let's see. You guys want to see what it is now? You guys are like, don't do it, Booksy. Don't do it. I gotta see. I gotta see what happened to it. I just have to. I have to see it. I have to see where that went, that 122. Holy cow. Yeah, it's up to like $4 a contract. It's up 85 cents today. So I would have been up a good amount. I had like a 320 price on that contract. So it went up to $4 already. Oh, well. Yeah. You live and you learn. I've never traded AMD before, so I guess that learning experience is something I can take with me. In the future, so I don't make those mistakes again. Sounds like a plan, Booksy. Sounds like a plan. So dumb. Man, oh man. That's part of life, right? But I think in trading, that's a take those lessons when you get them and try to remember in your brain. Remember AMD? Yeah, I remember. Remember how you got scared? Yeah, I remember. You said a stop that was terrible and you missed out on profit. I would have been done trading this week if I had just literally would have been finished. My weekly goals would have been met if I had just held it. So I'm facing loss in natural gas boil. He imposed taxes, increasing gas production and lowered gas price. Boil. Isn't that the ETF? That's like 3x or something. Am I right about that? Oh, no. Something else. I mean, sure. It dropped a bit. What are my weekly goals? My weekly goals are super low. So what I did is I took what I thought was what I needed for the month. So I'm in a dual income household, so I don't have one income. I'm not the sole provider, right? So for me, I don't have to have like these really lofty goals, which is fine, but I just don't need them, right? I can set them high, but I don't need to do that. So like I have goals that are basically just based on what I need to pay for certain things. So like I have like a setup of part of the income where is it going to go? And most of it's for my son and his college fund. And then some of it's for like other things, like paying down like a credit card or something like that. Like that's one of the things on there. And then there's a few others. Like getting to do the martial arts stuff. I pay for my son and myself. So I'm making sure, and it's not like we have a joint account. We've never split our finances. We're not that couple, but you might do that. That's fine. We don't do that. But I make it a point to pay for the things that I feel like are extra that I want to be able to afford. So I set these goals to make X amount per week, and then that totals up per month. Technically, I've already met my monthly goal, but I mean, the month's almost over, so I kind of started late, and yeah, so it's pretty low, pretty low. You guys are like, how low? Tell me a number. I'm changing it as we go, though, so it's kind of difficult to say. Because last year, when I started last year in the summer, I really was looking to make $250, which is really, really low. That's $250 a week, which is very low. But the reason for that was because I was working a part-time gig, and $250 a week was paying for these things that I had marked off. Does that make sense? So when I stopped working that part-time gig, I was like, okay, I can replace that income, then I'm fine. At this point, my goals are higher because there's other things that I've placed on. So it's not $250 a week anymore. That was like low because again, that's what I was paying for. So I needed to supplement that income. $250 a week sounds easy. And it is. If you have a lot of money, you could probably make $250 in like a minute, pretty easily. If you don't and you have a smaller account, $250 can feel like a lot because if you only have a few $1,000s that you're actively trading with, let's say you had $2,000 or $2,500, that's a 10% bump every week, which is a lot. 10% gain every week on your bottom line is a lot. You look at the averages that you get for like a mutual fund, they're going to give you that per year if you're lucky. You know what I mean? That's a big increase. 12% is ideal if you can get up to like 12 or 13% per year. But like that's a lot, right? You don't even expect that much. most of these mutual funds or whatever, if you buy into, you're happy if you get 8 to 10% a year. It's a pretty darn good return. I'm happy if it's green on some of these funds. So like the one that I'm using for my son is not unlike like a savings account. It's not designed to make huge amounts of money. It's designed to just have steady growth. So instead of like continually reinvesting profits where you're putting them at higher risk, I'm taking some of that money and setting it aside into a growth fund that is like that matures in like 2030, basically. Something like that. I don't remember. I have to look at the position for it, but it's basically set to mature like around the time when I don't think my son would be going to college in 2030. But it's set up in that way to be like a 5-year, I think when I started it was last year. It must have been 5.5 years or something like that. But it's like a 5-year growth fund. So it's up 7.8% since I first started investing in it. That's great, right? But that's a longer term investment. So like I'm happy to have that, and it's better than like sitting in a bank and getting like a few pennies thrown at you every month, as opposed to getting like 5 to 10% return over the course of 5 years. That's great. That's a huge amount for just kind of holding the money. So I actively trade with cash. Sometimes I don't have that much. I might only have like a few $100. Sometimes I might have a lot more, like a few thousand or whatever. I'm what would be considered like a small account. So I don't have like 50, 60 grand to throw at a stock, if that's what you guys are wondering. That's not me. Did I ever have that? Yeah. I had it twice on AMC. I had 75,000 when AMC first ran up, and then I had about 60 grand in August of 2022. Yeah, and both times I ended up getting crushed. So learn my lesson there, right? Move on. And yeah, so I'm like actively investing most of my portfolio most of the time in various things, but like the actively how much do I have cash on hand to trade is not like a significant sum. So if I take a $500 and make $500 off of it, that's still really good. But part of that is going to be put towards things, and so that cash is not just cash on hand. It's going to be put into things that I've already pre-designated. So once that's filled up, then I'm running on profit, and I can take that profit forward. So like my weekly or my monthly goals were already met. My weekly goals haven't been met this week by a decent amount. I mean, I'm probably like not even halfway there yet. I would have met them if I had just held this position this morning. I would have met them and exceeded them. So that's what I'm like, oh, that sucks. I mean, a lesson learned. So now I'm looking for other opportunities, perhaps. Other earning opportunities. So Ultra Bloomberg Natural Gas. I mean, I guess you could blame Trump, but this looks like a widening anyways. See how the spread is getting bigger coming up? So I would have suggested to you that this is probably going to go into a pullback period anyways. There's a massive divergence here on the price action. You see this rise here? That is bearish. So this was already bearish, at least working into, like, him signing something is not what, like, this setup suggests that this was already pretty bearish before then. There was a big gap. There's a weakening volume. You see the volume dropping down. going into this top. There's a divergent RSI. MACD is kind of flat. That would be considered like a weak divergence. But you can see visually like that up thrust here, it was ready to go down, at least to some degree. And then I wouldn't put it past this just being kind of a retracement back to this floor at like 56, at least to start. Probably going to see something around here on RSI as well, or excuse me, on Fibonacci's. Yeah, that's the 786 right there. And then big picture, the 618 is here. So yeah, I mean, in theory, that's the 0.5 on the big picture. It's a 50% retracement on the big picture, and then this is on the big picture the 786 retracement. This is Boyle. Seems about right, I would say. Oddly, zooming out, it kind of looks like a narrowing. So we're talking about it getting smaller as it goes up. I think that's reasonable too. You could argue that it's actually narrowing here a little bit as well. The volume here is really high in this top, so, and this is the previous floor. So, you know, it's kind of right there. It might hold. I mean, I'm being a little bit pessimistic saying it comes backwards, but if this cross up holds, then it's fine. The 1 hour looks like it's getting oversold much more quickly. This 4 hour has like an intense amount of space to potentially come down. So yeah, I would say it's more akin to, I mean, this whole thing is just like one down trend. What is this? Bloomberg natural gas. But it's got like splits like all over the place. It's weird. This makes it look like a one humongous widening. Look at that. The splits back in time. It's like, you see that? Watch when it goes up. That's crazy. So you're saying that, I don't know what you're saying. I mean, it's huge amounts of volume increase for sure. It looks like the volume's been steadily increasing over time. You can see like every time you add a little bit, the volume shrinks in the past, but that's because of these, maybe because of the splits just bringing in more buyers. Every area just gets more and more and more. I don't know what to think about that. Yeah, I don't know. I don't know what this is. I don't know how to. Natural gas doesn't look good. It's just like decade of downside. Yep. So yeah, Tommy Highlighter. I don't think that Trump is to blame. This has been in like a historic downtrend for a long time. And there's some issues with what we're seeing right now. I think if it loses this 61.50, it's probably going to head down to like 45. And then, I don't know, from there, it's hard to say. Maybe it finds some support, but this is just continuously like pushing low. So I don't really understand this chart beyond that. Yeah, it just seems kind of like the status quo to like come up and up thrust backwards and see if you can get back to previous levels of support and then continue down. Not my favorite. All right, so AMC is kind of building out sideways. I'm not really convinced it's holding anything yet. But I think that's it for me today. I'm not going to continue to stream. I got some other things I want to get done, and I'm probably going to trade and look at getting into Apple today and see where a good entry might be. I just like how low it is. I'll take another look at it before I do that. But if I do get in, I'll post it in the Discord group. And guys, right now, like in that group, if you've been looking at the trades, I haven't really lost anything, and that's just the truth. Like, I've only done like 5 or 6 trades this year, so thus far I don't have any losses. So if you're wondering like, hey, is he only just posting gains? Like, that's not what I'm doing. I'll post if I make a loss. I'll let you know. I just have been really making good trades. So like I've done nothing but make money this year, which is good. But there's going to be losses, and I'll post those if it happens, and I'll let you know. So I don't shy away from that. I just want you guys to know that. So if you're looking at that trading group and you're seeing like, oh, he's just posting all these, wins. Well, yeah, but that's because that's all I've been doing, which is good. That's a good place for me to be personally. But I just want you guys to know that if I do post a loss, that's true. Like I'm not just making stuff up that I'm making gains or whatever. I try to be as transparent as possible. So in that group, when you go to the tickers here, I don't think I posted the AMD one, so that's another one. But you go to like these tickers here, you can see that I'll put the results of the trade. But this was a quick trade that I entered. I told you why I entered it, and then I ended up making money on it, so on and so forth. Like, I'll tell you if I lose it though. So I post the results. So this was the entry level back here on the 8th for NU. I entered at just above or below 11 and into 1120 with support and those kinds of things, right? So this is where I'm posting those. Thus far, I haven't made losses, but I'm sure it'll change. So today I'll probably do if I do get into Apple, I'll do one. So this is the formula for it, or this is kind of how I post it. I'll put the ticker, I'll put the entry level. If it's an option, sometimes I'll put the entry level on the option, but I don't always do it just for time's sake. If I'm like just kind of running through it, I'll tell you what I'm getting. I don't typically talk about how much I'm getting. I feel like that's kind of unnecessary because really all you need to know is the percentages, and that's it. Like at the end of the day, if I get 1,000 of these or I get one of these, it doesn't matter because when I exit, it's going to be the same percent no matter where it is. I'll tell you what my stop loss is if it's a call or it's a put, that kind of thing, or just shares only. I think for the MPW, well, so these are calls, but I also bought shares in MPW. I didn't post that. So I said I did a shares only position, but I actually had both. So I'm not sure. I'd have to go check why I didn't post those, but I didn't post the shares. So I would say like shares only. But then I'll give you the reason why I think it's a good trade and then what that might look like. And in this case, I actually posted the options chart. Now at this point, for this particular option, I'm sure this went way up. But at the time, I was just looking for it to break here. And it did. And I got out, luckily, because it was a really bad pullback in the day. But like sometimes I'm not posting those. I'll just tell you what the result is. I'm like, out. That's it. I'm done. So this first thing this morning, 8:38 a.m., I'm talking about NU. Okay, it's all free. None of this is dependent on you guys at all. It's just me, and anybody can post in here. So if you do take a trade, you're more than welcome to post. Used to have a lot of people that would post in here, like back in the day, but I haven't seen a lot of other people using it. Yeah, I used to have a lot more people that were active in it. I've always been like the number one, but whatever. That makes sense. So that's that. All right, so that's just to share that with you. So if you're in that group and you're wondering where it's at, it's called trade planning. And I'm telling you what I'm doing and then why I'm getting in it. And then when I get out, I'll tell you like, hey, I'm out, I'm done. Whether it's good or bad. Okay? All right, guys. Appreciate you. Enjoy your day. And I will catch up with you all tomorrow.